We're now dealing with item 6. Our first session will be our discussion with the Central Bank on the report on local public banking in Ireland. I want to welcome Ed Sibley and your colleagues to this meeting. I wish to advise the witnesses that by virtue of 17(2)(1 of the Defamation Act 2009, witnesses are protected by absolute privilege in respect of their evidence to this committee. If you are directed by the committee to cease giving evidence in relation to a particular matter and you continue to do so, you are entitled thereafter only to a qualified privilege in respect of your evidence. You are directed that only evidence connected with the subject matter of these proceedings is to be given, and you are asked to respect the parliamentary practice to the effect that where possible you should not criticise nor make charges against any person, persons or entity by name or such a way as to make him or her identifiable. Members are reminded of the long-standing parliamentary practice to the effect that members should not comment on, criticise nor make charges against a person outside the House or an official either by name or in such a way as to make them identifiable. I want to invite Mr. Sibley now to make your opening remarks, please.
Thank you.
And I want to advise members that Mr. Sibley has to leave. So if you indicate when you're going.
Yes, sir, I have a flight ticket.
Is a flight to catch.
Good afternoon, Chairman, committee members. Thank you for the invitation to appear today to discuss the recent report on local public banking in Ireland. I'm joined today by Patrick Casey, the Registrar of Credit Unions, and Anna-Marie Finnegan, she's Head of Policy in the Registry. In my brief remarks today, I will address three topics that intersect between the scope of the report and the work of the Central Bank. Firstly, I will provide an overview of the process for bank authorisation. Secondly, I will outline developments in the provision of credit to the SME sector in Ireland. And thirdly, I will discuss the regulation and supervision of the credit union sector. Firstly, authorisation. Since 2014, the ECB has been the competent authority for the authorisation of banks in Ireland and across the Eurozone. This means that applications for bank authorisation are dealt with in a consistent manner across the entire Eurozone. In practical terms, the national competent authority, in the case of Ireland, that's the Central Bank, assesses applications in consultation with the ECB prior to a recommendation being made whether to approve the application or not. To this end, the Central Bank has dedicated authorisation teams following processes that are transparent, predictable and consistent. The assessment of an application will consider the financial resources the firm has available, the sustainability of its business model, governance and risk management arrangements, and its ability to recover if it gets into difficulty. Applicants that can meet the requisite standards in these areas will be approved. Turning to SMEs, the Central Bank understands the importance of SMEs to the Irish economy. SMEs account for the vast majority of active enterprises by number and employ about 2/3 of the Irish workforce. In Ireland, the majority of SME investment is financed through internal funds. For external financing, bank lending and leasing are the two largest sources of funds. And recognising the challenges faced by the SME sector, the Central Bank has issued regulations that aim to strengthen protection while also facilitating access to credit. The provision of credit to SMEs in Ireland was undoubtedly severely impacted by the financial crisis. Total credit outstanding to non-financial, non-real estate SMEs stands at 16.2 billion as at Q1 2018, which is significantly lower than it was at peak. Default levels remain high at 23% of total loans outstanding, and three banks have a market share of 87% of all new SME loans issued in the first quarter of 2018. This concentration, together with the higher historic levels of default in Irish SME lending, are contributory factors to interest rates for Irish SMEs being higher than average interest rates for SMEs operating in other countries in the Eurozone. Annualised new bank lending is recovering. It's risen from 2 billion in late 2013 to 3.75 billion as of the first quarter of this year. This recovery has been broad-based across industrial sectors, but two sectors are predominant: agriculture and wholesale and retail trade. And they account for 42% of new bank lending into the SME sector. The credit market has shown a reduction in the SME application rate for bank financing since 2012 until 2017, but has stabilised and started to recover somewhat since. Demand for financing is most common among medium-sized firms and lowest among micro-sized firms, those with less than 10 employees. The rejection rates have declined from March 2012 to March 2016 and have stabilised in 2017 and 18, but are still higher than European averages. And micro firms experience significantly higher rejection rates than other SME types. The establishment of the Strategic Banking Corporation of Ireland has provided a further source of funding to Irish SMEs. Total loans drawn down from inception to end March 2018 stood at €952 million. There are also a range of asset-based financing firms, peer-to-peer lenders, invoice discounters, leasing firms and other types of non-bank finances that have entered the domestic market in recent years. Turning now to the credit union sector, credit unions play an important role in Irish society and in the financial system. The role and ethos of the sector reflect the primary objectives and purpose of credit unions to promote thrift among their members by the creation of sources of credit for members' mutual benefit at fair and reasonable interest rates. Our role in relation to credit unions is reflected in our statutory mandate to regulate with a view to ensuring the protection by each credit union of the funds of its members and the maintenance of financial stability and the well-being of the sector as a whole. The Central Bank is supportive of further developments of credit union business models. The consolidation and strengthening of the sector has seen improved standards in the running of credit unions and their financial resources, but further progress is required on embedding governance, risk management and operational capability. The emergence of larger and more sophisticated credit unions presents additional opportunities. Credit unions are already permitted to provide commercial loans but are not currently particularly active in this type of lending. The Central Bank will be very shortly consulting on proposed changes to the lending framework for credit unions, and the proposed revisions also provide increased capacity to engage in both home mortgages and commercial lending for those credit unions with the financial strength, competence and capacity to do so. Should credit unions wish to become involved in a local public banking model, they will need to ensure the continued protection of members' funds and comply with the legislative and regulatory framework that applies to credit unions. I hope the above has been useful in terms of the topics the committee wishes to discuss. Thank you.
Deputy Doherty.
And I want to welcome our guests to the committee. I'll be as brief as I can, given the time constraints and other members want to come in. So just in relation to the Sparkism model and the report which was published by the government, the central bank's position on that issue, whether there should be that second tier of banking, that kind of Sparkism model, what is the central bank's position in relation to that?
So we're certainly open to it, and we can see that there are legitimacy in the concerns that have been raised around, for instance, access to financing for SMEs. But we don't have a position as such. So if as a public bank sought authorisation, then we would look at it on its own merits. And subject to the four areas that I outlined, we certainly have no issue with authorising.
And I appreciate the role of the central bank in terms of the authorisation process and all of that. And obviously, if there was, that role would have to kick in. But it's 4 years now since Governor Honohan responded to myself in this committee when he said, and it's worth just quoting him back, he said there should be a second tier of banking which is geared more towards local concerns with local managers and a greater level of local awareness. This would be on a scale larger than the credit unions. They could be the nucleus of it, but the credit unions as they stand are too small individually, but to be really effective suppliers of services. This is all a long-term vision. The entry of large international banks into the Irish system doesn't seem to be coming down the tracks, although things could change. Very clearly from the Governor at that point, and he was the Governor of the Central Bank, he very much advocated that type of second tier of banking, recognising gaps that were there in terms of lending to SMEs.
So we would certainly welcome that. There are clearly, as I've identified, there is clearly a very concentrated banking market, and there are areas that are less well served as a result. So clearly more competition to make sure that those needs are met would be welcome.
Okay, and in relation to the concentration, and you've provided some figures there, 87% of the market share of SMEs were in 3 banks, and you talked about this concentration and also the historic levels of default are one of the reasons, or one of the contributory factors in terms of high interest rates for SMEs. In your view, looking at international experiences, what should be the market share be for that type of 3 banks? What type of concentration should we be looking at if we were to have a more normalised banking system here?
So, I mean, I'm not sure that you could say what should be the case. Clearly that's a very high level, and particularly from an SME sector perspective, it's higher than in the mortgage market, for instance, which is also relatively highly concentrated. There's much discussion from a European perspective around other parts of Europe being overbanked, having too many banks, and that impacting on sustainability of the banking systems in other jurisdictions. So there isn't a kind of like-for-like comparison. I would also note that, as I said in my opening remarks, that there are other sources of funding for SMEs, and a lot of SME investment is driven through internal funds. And there are studies that show that Ireland is kind of mid-table in terms of SME access to finance. If you look at it in the round, not just bank finance, but other finance that's available there.
You gave an example of the increased level of new bank lending to non-real estate to SMEs, and it increased from 2 billion in 2013 to 3.75 billion in the first quarter of this year. What should we be looking at? Again, I'm asking you, how far away are we from where we should be in terms of a normalised banking system? You know, should it be much more? Should it be a lot more? You know, and from the central bank's point of view, or do you think that still lending to SMEs is suppressed, or is it at normal levels? So I'm trying to get a range from the central bank as to where do you think lending should be at the minute. You talked about the survey shows that micro firms are experiencing a high level of negative responses from lending institutions. So should lending from the central bank's point of view be increased?
So we would certainly hope that there's continued to be investment from the SMEs are continuing to invest in their businesses. I think it's in and around 23% of SMEs are looking for finance, which suggests that a large number of them are financing investment on their own account or through other means. So certainly we would, from an economic perspective, be hoping the SMEs continue to invest in their business. It's again difficult to be precise in terms of figures. What we can see is that the total stock of SME lending has reduced from in and around 30 billion in 2010 to around the 16 billion as of today. Now, there was a high degree of indebtedness and unsustainable levels of indebtedness at that period. But we would expect SME lending to continue to recover to some extent.
And see those figures that you're presenting in terms of new bank lending, is any of that refinancing old debt?
So yeah, I'm sure it is. So
a large portion of the new lending on mortgages from banks, about 20% or thereabouts, is switcher lending now. So it's not necessarily.
Yes, I mean the nature of SME lending is such that there will be kind of revolving credit. There will be kind of some degree of movement within that, and there will be then new financing needs. I don't have the breakdown.
Okay. The final question here is in relation to just the report, the government's report. They seem to argue very strongly against that type of second-tier Sparkism model, and they argue that the banks that recovered SMEs are receiving the credit that they're looking for. Your suggestion isn't as you're suggesting to this committee. It's not as plain sailing as that. There's high levels of concentration. There's still some demand out there that hasn't been met. Would that be an accurate reflection on where the central bank is as opposed to the Department of Finance?
I didn't talk about the demand per se. I mean, I think there clearly are still relatively high levels of rejection rates. There clearly are interest rates are clearly higher here than in other jurisdictions. If you look at it in the round, as I've discussed, there are studies that show that Ireland is kind of mid-tier in terms of financing of SMEs. If you look at it beyond just banks, clearly, I think looking at the report, it does call out that it's a concentrated market. It does touch on potential roles for credit unions and other bank finance. So it articulates, I think, that there are potential areas for consideration, but it also identifies the need for public investment in order to set up the model that's being proposed, which is a decision for the political system whether that's warranted.
Can I ask just one final question, and apologies for the last one? You mentioned again the issue of the interest rates, and in your opening statement you talked about the concentration and the high level of defaults as contributing factors to high interest rates for SMEs. Do you see any ingredients out there that will result in, or any signs that we can expect interest rates to reduce for SMEs to bring them to a more normalised level and comparative to those across Europe at this point in time? Or are we, given the level of concentration, given the dominance that the three banks have in terms of SMEs, that there's no competition here and that we're likely to see those elevated interest rates being charged on businesses for quite a period yet?
So I can see that there are similar factors at play here as in the mortgage market, which is a degree of growth in the economy, recovery of the banking system, some degree of increased competition between the banks, and also some degree of competition coming from outside the banking system. All that and continued addressing of the legacy of debt and non-performing loans should hopefully address that issue over time.
Thanks, Deputy Senator O'Donnell.
Yeah. Thanks very much, Mr. Sibley. And I suppose I just want to take up a couple of points. I suppose one of the reasons this particular session arose was we visited Germany a number of weeks ago on a delegation, and particularly to look at the Sparkassen model. And what we looked at basically was we looked at the operation of a Sparkassen bank in operation. So we met Sparkassen in their headquarters, and equally then we went to Ludenberg, where they have one of their Sparkassen banks. And I suppose a number of features struck us really was that, number one, they had an old-style type of banking, which was trainees came in from school, they effectively did in-house exams. It was like the banking system a number of years ago. Heavy orientation on in-house training, courses, banking exams. Their model was based on effectively a low-risk model in the main, where they effectively charged a percentage on top of the cost of funds from deposit holders. They're not publicly owned as such. It's a bit of a misnomer. They're, I suppose, regionally organised, might be a better term. Ultimately, the beneficial interest will revert back to the municipal in whichever region. There's a lot of attractions to their model in that they're prohibited by law in states from engaging in speculative lending. They're effectively regionally based, and they're very much, when we met the public in Germany, I didn't meet one German who had a negative view of Sparkassen. Now, they have Landsbank out there as well, and that's a separate issue again. But I suppose what came across was that the credit unions or the post office I want to, I suppose, deal with. I'm not looking for a state bank, I'm looking for a public bank. And the credit unions and the post office both provide a network. The post office, I suppose, is ultimately state-owned, the credit unions are not. And I suppose the couple of points I wanted to put you really were, you made reference in your presentation, which struck me, was you said that the survey, this was a survey done by the Department of Finance, and you said the survey also shows microfinance experience significantly higher rejection rates than other SME types. And I would have thought that there was scope within the regulation of credit unions and our model to fill that void, which is a void which is SME, small SME lending. I note that on Post have made reference to bringing a partner on board in terms of home loan lending. And I suppose the point I wanted to put you really was, if the credit unions were to provide, we'll say, a back office national facility, which is where loans come in that could be adjudicated upon, a bit like the Housing Finance Agency, but I know they're doing a form of it for home loans. How would you view that? And I have a particular, I suppose, personal view that we need another pillar. We need a public banking pillar. So the question is, what would be required on the face of it from a regulation viewpoint to allow the credit unions to move into that space? You could put limits on the level of SME lending, but they have, I believe, they have a network, they have staff, they have, I suppose, a credibility with the public. They're very similar to Sparkassen in Germany in that way. So you might just give me your perspective. So I'm asking really here is I'm trying to flesh out what the regulators would look for to allow the credit unions in particular and on post are going into the home market to move into that space from a prudential viewpoint.
Okay, thank you. There's quite a lot in that, so I'll make a few comments and I'll bring
from our perspective.
Yeah.
We went out and we saw the bank in operation. There was a lot of attractions. I'm not certain that the Sparkassen model that's in Germany would work, but there was a lot to be said for the public banking model and how we could bring it back and take key elements of it to be adapted within the credit union system, post office system, to provide another pillar, a public banking pillar in our offering to customers that I believe currently isn't there within the SME and the home loan sector.
So I mean, I can certainly see the attraction to kind of that old style banking, which is as you describe it. There are certain models that that deliver that. There's the public banking, the Sparkassen type model. There's also the likes of Handelsbanken, which is a Swedish bank, which is privately owned, but very much focused on relationship management and typically would have kind of quite an extensive branch network, and has been reasonably successful with that model. I would have a kind of degree of familiarity with the Sparkassen model. Yeah. I used to, back when I was in the UK, I would have supervised the Landsbanks there.
Well,
So I mean, so I appreciate there's
not perfect.
There's a connection there, and there's some challenges the Landsbank had.
But the core Sparkassen model.
But the core, there's a lot of similarity, and indeed you've touched on that, between the Sparkassen and the credit unions in terms of how they are set up to serve the local area. And that has proved reasonably successful, not without its challenges. So if you'd have spoken to the regulator there...
I'm fully aware that certainly with some of the Sparkassen models, they have an over-concentration of lending in certain regions. So if they're in a region, they're in a we'll say a region to do with cars, they have an over-concentration. Bank was 100% subsidy of Sparkassen, went into speculative lending. Indeed. So I'm aware of all that. I'm zoning in on looking at the credit union movement, which has enormous trustworthiness with the public, and some of the credit unions got into trouble, but came through relatively unscathed. They're based in every town and rural area in Ireland. They have resources. They have 7 billion on deposit with the mainstream banks. And I'm asking, I believe there is a need in terms of competition for, and the regulator will take the view in Sparkassen in Germany that they put the other banks under unnecessary pressure, Deutsche Bank being one. I'm aware, like we went down in, I won't have it perfect, but I fully understand. I'm not coming back with rose-tinted glass in Sparkassen, but,
no, I understand that.
But I'm coming back to see what can be taken from the model to allow us to progress, to put a public banking model in place that is owned by the members, not privately owned, that is not a state bank, but is a bank that can serve that. And the credit union network appears to have take a lot of those elements. The question I'm saying is, what other elements would you like to be in there from a prudential basis to allow it to move in that direction and serve the small SME sector as well as we'll say people looking to get their starter homes? And
yes, so there's a I'll turn to Patrick in a second. There's and I guess it's connected with Deputy Doherty's questions as well. Is the gap, or perception of a gap at least, between where the credit unions are operating and where the banks are, and whether the credit unions can, to some extent, close that gap and serve SMEs at that micro level sufficiently well on an individual basis, because they are individual entities, or whether there is a need in somehow to bring them together, or alternatively have this create something entirely new. And I guess that's ultimately the question that's being posed.
Well, the model I'm looking at is that let the credit unions operate individually, but if they're moving into an area, you must have prudential lending, and the skill sets must be available to enable that lending to be assessed. And I'm wondering, can you come up with a model where they're doing it at the moment with home loans, where they have appointed is a capita to look at home loans as they come in? I'm wondering, can you do something similar in the SME sector to allow any credit union to offer the facility, but with a back office set of skill sets to enable loans to be properly assessed?
Essentially what you're describing there is some kind of shared services model, yes, that supports the credit unions at the front end. So that's certainly something that we've engaged with. I mean, what it would require, to be clear, is some kind of proposal coming from the credit union sector, okay, for them to come together with a kind of well-formulated, well-thought-through proposal which has that shared service model behind it in some way. But I'll turn to Paddy.
Yeah,
Can you elaborate?
Yeah, thank you, Ed, and thank you, Senator O'Donnell. The concept, I guess, of using the network of whatever 259 credit unions. I think there are something like 540 odd locations if you include branches. That concept is a valid concept by way of coverage.
Yeah.
I suppose the question is, you know, and Ed has mentioned this notion that credit unions are individual entities who lack size and scale, and therefore, you know, could benefit from access to expertise, and could indeed benefit from access from that scale by working kind of together. And certainly in the support services area, thinking of the Canadian model.
Yes, that's the model I'm thinking.
Yeah, they have central credit unions by provincial areas, and then those central provincial credit unions serve the credit unions in their area in terms of liquidity pools and various back office supports. You know, so it's a concept that has worked and served the Canadian model very well. I think in the US they have similar CUSOs, and in Australia. I suppose it does raise competition considerations. So if we're talking about a competing community or public bank coming into existence, to the extent that that public bank would be both, you know, providing shared service supports to credit unions on one hand, as well as competing with credit unions in relation to deposit sourcing and in relation to the provision of loans, you know, it does raise competition issues.
No. I suppose mine was a more simple formula. Credit unions would remain individual credit unions, yeah, having to meet their own prudential requirements. But I'm at a situation, as it stands at the moment, I believe, I'd say, as do many of my colleagues, that there's currently a gap in the market to service that small businesses in rural communities or in cities and towns. And if the credit unions were to come together, and obviously individuals pay a levy or whatever to a central shared service, to enable them to access expertise in terms of the assessment of SME loans above a certain level, the shared service would not be competing with the credit unions. The shared service would be effectively be funded by the credit unions themselves, to enable them to have access to the skill sets, to enable them to assess micro loans in wherever you can walk into a small or whatever size credit union, and that would provide the comfort in terms of the regulation by the central bank.
A shared service, that shared service model is something that is definitely plausible. But it would require credit unions coming together and working out how to make it work, and as well as ensuring that they are continuing to kind of respect their own common bond in terms of where they're lending and who they're lending to. I mean, if it's helpful, maybe we could just touch on, because we're aiming to consult this week on changes to the longer-term lending rules that we have, and including thinking about this kind of micro SME as well. So maybe, Patrick.
Yeah, sure. Yeah, I mean, so you may be aware, Senator O'Donnell, that we've been looking at the lending framework that applies to credit unions, having concluded a consultation earlier this year on the investment framework, which accommodated the provision of social housing funding. And we are looking at proposals to remove the current lending limits for 5- and 10-year loans, connected really with, rigidities got to do with the fact that the denominator there are loans. So that has caused some issues for individual credit unions, I think, which have been touched on previously, and also caused some procyclicality issues. And replacing those then with new tiered concentration limits for house and commercial lending. So that would involve base level of limit for all credit unions, but then higher level, more flexibility for those that then can demonstrate the capacity to undertake additional lending from our prudential perspective. And that would cover both house and commercial lending, so both categories. Now, I'm conscious that much of the discussion here is in the kind of SME space rather than in the house lending space. Credit unions are permitted to provide commercial loans, as they're termed under the credit union framework, up to 50% of their regulatory reserves. Yeah. So currently the sector has about 90 million outstanding in loans to SMEs, and about an average loan size of about 20,000 per loan, which would be quite different from, let's say, the average loan size that the three main banks that operate in the market would provide. And currently credit unions are only using about 10% of the existing framework's capacity. So they're only using 1/10 of the capacity they have today. But they have an opportunity, to meet any demand at a local level for SME lending. I would say that their typical SME loan is a small, to a small local owner-managed business, whether it's a shop or a tradesperson or a farm or something. That's their kind of traditional sweet spot in terms of lending into SMEs. And that's kind of linked to personal lending in a way. It's through the member channels they have today, rather than varying outside those particular channels. We did send a questionnaire to the sector during our preparatory work for our forthcoming consultation, and the appetite among those who thought there was a need for a change in the framework amounted to what they saw over 5 years from now to 2022. The total lending amount is only 136 million. Okay, so I think we need to ground the discussion in some kind of realism as to the demand the credit unions themselves see of SME lending. It's not significant from their perspective, their own.
Then finally, do you believe that in the current, we're saying the current rules, do you believe that there's sufficient scope for the credit unions to
Yeah, so they're using 1/10 of their current utilisation, Senator O'Donnell. And
what's the 90%? How much additional could they lend?
They could lend up to, it's almost 900 million they could lend if they lend fully on the current framework. And we are talking about consulting very shortly. We'll be sharing the consultation papers with the committee. But we're talking about increasing that for credit unions that are stronger, who can demonstrate the capability. So that there should be adequate, ample capacity in that space.
Deputy Murphy.
Thanks a lot. Just a question, first of all, in relation to the government report on local public banking in Ireland and what your reaction to that report is. I mean, effectively, I'll summarise what I think the essence of the report is, but feel free to give a different assessment, is that the key lines are saying that there's not a compelling business case for the state to establish a new local public banking system, but going on to say that there's no impediment to Irish Rural Link, etc., taking action themselves, but they're not going to do it with state funds, is effectively what the report says. If they want to go and get the money and do it, there's no impediments to stopping them do it, but the state isn't going to provide funds. And, my interpretation of that is that it's a negative. It's not positive about the establishment of local public banking, and it's not positive because its bottom line point is it's not going to provide money to do it. And, of course, that's somewhat ironic in terms of the amount of public money that was pumped into what were private banks to rescue them from the crisis, and shows a clear favouritism towards the current private banking system that we have. Do you think, one, that's a fair assessment of what's in the report, and two, what do you think about that, or what does the central bank think about it, to the extent that the central bank has a position?
So, as I described earlier, having looked at the report, and also the response from Rural Link to the report, as I described earlier, I can clearly see that there's an acknowledgement of the concentration in the market, that there are some inhibitors to bank finance in Ireland, and typically SMEs in Ireland use bank finance less than in other parts of the EU. But there is in order to set up a public bank, the report identifies that requires some degree of state finance. That's the conclusion of the report. They do describe some business model challenges as well, which is I wouldn't have a particularly strong view on either way. But I mean, from a central bank perspective, clearly, if that's a kind of there's a fundamental question there in terms of authorising a bank to both lend responsibly but also to fund itself responsibly. It needs capital, and absent that capital being there is nothing for us to authorise. So we've met. I've personally met Rural Link a couple of times. Met the Sparkhousing representatives. So we're certainly very happy to accommodate and engage and discuss. And we're going through a lot of authorisation activity at the moment, so we're well versed in that. But there are some kind of basic fundamentals about authorising a bank, and unless those fundamentals are there, it's not possible to authorise one.
Yeah, okay. And then just more generally, do you accept that, or do you think that there's a problem with the model of banking we have in Ireland and we have in most countries at the moment, where banking is in the main private for profit, even where you have state-owned banks, in reality they're run on that model, and that has proved to be a very problematic model, both from the immediate scandals that we end up dealing with here in terms of mortgages going to vultures, in terms of tracker mortgages, but also in terms of the much bigger problems which obviously cost society a huge amount of money in the course of the last decade or so. And there's an argument out there that I would subscribe to, that banking should be treated as a public utility. It has many of the features of a utility, and it should be regulated and owned as such. How do you respond to those points?
So, in terms of how we look at the financial system as a whole, so our role is to act as public servants. That's why three of us here and everyone who works in the central bank comes to work. And our absolute desire, aim, ambition for the financial system is that it does serve the needs of the economy and society as a whole, and it does so in a sustainable way over the long term. The work that we have done, the work that's been done since the crisis and is still being done to address those fundamental problems within the banking system and in other parts of the financial system, have most definitely improved the resilience of the system and moved us, hopefully, to be in a situation where the system can serve the needs of the economy and its consumers over the long term in a more sustainable way. But there is still work to be done, and we've seen that through trackers, we've seen that through the recent work on culture, and I would not say anything other than there is still work to be done and there are problems in the institutions. You ask a kind of somewhat more political question about views about private and public ownership. I think that's a matter for the political system, not a matter for myself.
Okay. And do you think that, I thought that the phrase you used is good, that banks should serve the interests of society, consumers, etc. It seems to me that in the last decade, society has more been serving the interests of the banks than the other way around. Do you think it's the case that on the whole, the private banking system that we have does serve the interests of society as a whole, of the economy as a whole, etc.?
I would say imperfectly. So if we imagined a circumstance without functioning banks, and clearly in the history of Ireland that was we stared down that particular barrel. If you think that as a the alternative proposition, then you can see that clearly from an economic good and a societal good, the banking system serves a function, but I wouldn't claim that it serves it perfectly.
And then just finally, do you agree with the idea that there is an implicit state guarantee and effectively an implicit subsidy by the public to private banks as a result of having banks that are too big to fail, which obviously we saw in practice in this country in the course of the last decade? There was a recent study done which concluded that the total implicit state guarantee for banks, private banks within the EU, is 240 billion euros. And does that not contradict the point of a private, free market, laissez-faire system, that in reality, if you get too big to fail, well then, not only are you not going to be allowed to fail, but also investors know that you're not going to be allowed to fail, and in effect you have a subsidy which also serves to benefit the existing banks, big banks in the market, as opposed to new entrants or whatever.
So certainly, and again, Ireland is unfortunately a case example of this. That was the case in the past. But we saw that in multiple other jurisdictions across Europe and the US and beyond. Since the onset of the financial crisis, a huge amount of work has been done to try and address that particular problem, and to make banks more resolvable, and to enable resolution authorities to bail in private funding of banks. I would say that's work that is progressed, but it is not as far along as I would like. So you can see through the mechanisms that have been put in place in terms of improving the resilience of the system, which I talked about earlier. At a European level, the creation of the resolution mechanism within Europe, and the work to push banks to make themselves more resolvable. In my opening remarks, I talked about the four things that I look for, and one of them being recovery, ability for firms to recover if they get into difficulty. The mirror of that is the resolvability. So while we expect firms to be able to recover, we are also working hard to make sure that they are resolvable. They are more resolvable than they were, but they are not fully resolvable as of today. So that would imply that there is some element of subsidy there, but it was a much reduced one than was the case before.
Thanks. Just a quick question, Mr. Sibley, in relation to figures and that the central bank would compile. I just want to check. Do you produce figures, say, for 2017 and in the current year, relating to the amount of bank credit lent to, for example, categories such as non-financial corporations? Or do you have figures for all businesses excluding national financial corporations, the SME sector and households? separate figures for all of those categories?
Yeah, so we would have pretty granular, or very granular data, which I've attempted to summarise in my opening remarks. But we can look at lending to households, by type to households, to look at...
You don't have those figures there with you, do you?
Well, what I have here today is by sector in terms of SME lending, total stock, the default rates, total lending into the Irish system as a whole, it's kind of size of the banks today. So there's lots, but if there are specific requests that I can't answer today, I'm happy to take them away.
Yeah. I'm giving you those categories there: non-financial corporations, and then all businesses, excluding those, and then some for SMEs and households.
So the numbers I've tried to give there is to try and articulate the size of SME lending. Right, so that's kind of the total.
No, I understand that, but I'm just trying to get from you. If you don't have them here, maybe you'll provide them.
Yeah, I just want to make sure I understand the request.
And we'll get those figures from you.
Yeah. So,
Okay.
we publish a huge amount of data and information on. So if I haven't got the right figures or the figures today that you wish, then I'm certainly happy to.
Okay, I'll give you the detail before.
Yeah,
before
happy
I
to.
leave. And do you have an average interest rate being charged to SMEs for different loans? Is there an average interest rate?
Yeah, there is, but I think one of the things that's quite important to look at, while there's variation, because we talked about mortgage interest rates before, there's a degree of variation within the average. It's quite significant, the variation for SMEs, because you have different sectors with different risk profiles, and also have different levels in terms of the size of the loan.
But you have those broken down into categories.
So certainly we have information
Okay.
on interest rate.
Okay. I'm just trying to categorise the different levels of debt. That's what I'm trying to achieve here. So I'll give you the sectors I'm talking about.
Fine. Yeah.
In a CIA report, the report on for each country, it estimates that 31st of March 2016, Irish debt was 2.15 trillion euros. How does an organisation like that come about, or come to the conclusion that that is the overall debt of a country? They publish these figures for each country, and particular in different years. And I looked at the figure for 31st of March, and that's the figure it gave. And I'm just wondering, do you analyse the rationale behind that figure?
I'm not familiar with the specific report you referred to. So again, I'm happy to follow up on that. Is that the report that's netting off kind of public assets and private debt? So certainly.
Does the central bank analyse those reports in terms of their accuracy and?
So the central bank will look at lots of different information, and certainly would take great credence of information from or reports from respective bodies that kind of that look at the state of.
And the last question I have for you is the financial services sector. Within that sector, if there's bad debt or debt, is the government in any way attached to that debt, liable for that debt?
So, I'm sorry, maybe just to, can you just explain that a little bit more?
Within the financial services.
Yes. So this is loans that they've made, or loans to them?
Yeah.
So
both. Yeah.
So, I mean, the short answer is no.
No. Okay.
But there are there's the likes of the deposit guarantee scheme, which does offer protection to deposit holders, but it's ultimately a call on other financial services. It's similar to this discussion I've just had with Deputy Murphy, is to actually that the aim of making firms resolvable is to address any implicit taxpayer support.
Yeah. And you mentioned in your opening remarks, and it's mentioned in the report on the community banking
Yes.
model here, SBCI. What is that bank? Is that a bank regulated by you?
No, it's not. It has banking in the title rather than banks.
It has banking in its title, and
and
handles a lot of taxpayers' money.
It typically, certainly, elements of its lending is channeled through other entities rather than directly by itself. But it's not a regulated bank. No.
And there is no. You don't have any oversight whatsoever over that.
We're not responsible for overseeing that. No.
Even though it's a sizable amount of money, 1 billion, as if they've lent.
So it's 950, I think.
Yeah.
That's it. Yeah.
Okay. Your opening remark, or your opening statement rather, dealt generally with stuff. It didn't really go into a commentary on your view of the government's report.
Was
that deliberate?
Well, it was. To be honest, we were not entirely clear what you wanted to hear from us, which is. But having looked at the report, clearly there's a question of, what would you do in terms of authorising, which is where we'd have responsibility here. There's clearly a concern in the system around SME lending, so that's why we've talked about SMEs. And there's clearly connections with the credit union sector. So in 5 minutes, which was my instruction to try and cover the areas which I thought intersected in terms of central bank responsibilities with the topic that you wanted to discuss, is basically the driver behind the.
Do you think that the Irish banks, the main pillar banks, are being protected by government policy?
Personally, no. So
do you think that they're being protected to the exclusion of such community banking initiatives as Sparkison or others?
I genuinely don't think that.
Do you think that there's room in the market for Sparkison, or for the credit union to be enabled to spend or to contribute in terms of economic activity, the 7 billion that they have with the mainstream banks?
Clearly there is a role for credit unions. We've touched on this on a number of different occasions, but only touched on it. I'm a very strong believer in the role of credit unions. They can play a really important role from a financial inclusion perspective. They can play a really important role in terms of local communities, and we are, as Patrick has outlined, examining the lending frameworks that are there today to make sure they're fit for purpose for today and tomorrow. So clearly there is a role for credit unions. There is potential for opportunities for others to play a role in servicing SMEs in other parts. But if you look at and I can provide this to you. If we look at how banks are lending within Ireland, it's actually relatively well geographically dispersed. There's a obviously Dublin takes a lot, but it's kind of in and around a third of new lending takes place in Dublin, and other jurisdictions are relatively well dispersed. And there are lots of other options for SMEs. Maybe it's not enough, but there are lots of other options for SMEs in terms of access to finance. So leasing plays nearly a bigger role for SMEs in terms of total finance as bank lending does. Internal funds, so kind of internal generation of funding, plays a much bigger role in terms of the investment that SMEs do than bank finance. And then we have other possibilities with kind of peer-to-peer lending is increasing and so on. So there are other players in the market, not necessarily just banks. And I don't want to kind of overly focus on one particular study, but there has been a study of kind of the European system and SME access to finance, and Ireland would rank below the likes of UK and Germany and Austria, but above the likes of Italy, Portugal, and Greece and Cyprus. So somewhere in the middle
For access.
for access to finance, if we look at it in the round, as opposed to just looking at purely from a bank finance perspective.
Just to say to you that SMEs tell me that they find it impossible to get funding, and often the only route open to them is the likes of group funding, people that will come together and make available a sum of money, and they test you out then in terms of your business plan, and then that money, that loan is offered to you at a huge interest rate.
Right.
And it's damaging to the economy and to the SME sector, who employs so many people, almost 1 million at one stage. And I think that the statistics actually hide that fact. The banks can say, I think Deputy Doherty asked you the question, was that part refinancing, existing arrangements within the bank? And actually it is.
It is, yes.
At a higher interest rate. But if you go to the bank now, if you had any sort of blip in your credit position, you won't get money anywhere, except on the market where you're paying massive interest rates. And that's why, the concept of a community bank or a credit union to examine a local application or an application from a local, business or whatever it might be, is hugely attractive, because at that micro level in SMEs, it is simply impossible to trade, and banks often make it even more impossible by setting off your overdraft. I know you have to catch a plane, so.
I've got a bit more time clearly, and as Patrick has described, we are looking at the approach to the lending regulations. We haven't talked about the credit review office yet today, and that does valuable work. And if borrowers feels that they should have have a strong case for gaining credit, can appeal to the credit review office, and they turn over, I think.
Yeah, but I've seen SBCI, for example, applications to it being refused by the bank, and then having to go back to the credit review office, and the credit review office saying, yeah, you should get that loan, and the bank saying, hump off, you're not getting the loan, that's it. And I go back to the credit unions again, like we're talking about community banking, and the model already exists almost because of the credit union movement. So therefore, Mr. Casey is the credit union man, is he?
He's the registrar of credit unions, yes.
Yeah. So to expand sensibly, that network and that ability to lend money through certain credit unions that have the management systems and knowledge and so on to do it, it's there. Allow them to apply it.
But we're not preventing them in any way. They have ample capacity, Chair, to undertake commercial lending. So, as I say, I think the outstanding stock of SME loans in the credit union sector is around 90 million, and they have capacity to lend about 10 times that amount.
And are you saying,
today,
I heard you say that earlier on, but are you confirming today that there is no regulation there that would prevent them from lending the difference between their 90 million and their 900 million or whatever?
Yeah, so it's down to the credit union's own business model, risk appetite for SME lending, credit choices it makes, and that's down to the board to define what it wants to lend. The orientation of a credit union clearly is to lend within its common bond, and to the businesses, I think I described earlier, tradespeople, local farmers, shops and so on. And that's the kind of bedrock of the borrower from a credit union point of view, with an average loan size of 20,000.
And mortgages?
And mortgages, so the credit union sector obviously are already involved in the mortgage sector. So about 110 or so credit unions are involved in mortgages. There's 165 million in mortgages outstanding today.
And with your engagement with the credit unions, is it one of the credit union asking you for direction or asking you about regulation, or is it a question that in that conversation ways of developing their business, methods of developing the business is suggested? Is it an open conversation to achieve an end to improve the credit union system?
So credit unions today are free to provide mortgages to their members if they have the risk appetite. Credit unions today are free to provide commercial loans to members if that's within their risk appetite. They don't need regulatory approval. Now, clearly the sector engages with us at individual credit union level or between like-minded credit unions or with the representative bodies regarding business model initiatives, and we have a business model team that's there to support credit unions.
What's your view on the? Sorry, Mr. Lee, what's your view on the credit bureau and the fact that lenders look at the credit bureau and say, well, if you're on the credit bureau, you can't get credit. That's what lenders say. At banks, credit unions, you name it.
Yeah.
So everyone is caught if you're on the credit bureau. And how long does that last for? Is there a way of dismantling some of that to allow some sort of loans to be granted, or is it completely being held by the banks and the credit unions?
Yeah, if I could just make a couple of comments about that. I mean, I suppose the purpose of the Central Credit Register is that there would be good quality information available to lenders, including credit unions, so that when they're undertaking, an underwriting decision, that they have access to information about all outstanding exposures that an individual borrower might have, and indeed information on their historical experience with previous debt. That doesn't specify what decision has to be made. It is just information to inform the credit decision. So
you're happy that they can make a decision regardless of what the background is?
We'd expect them to take the information available into account, but they can also take other information into account. And as I say, once they can demonstrate that they have established a capacity to repay, we're comfortable.
Okay. If I could just add an observation, and I think to answer your previous question, that the credit union sector gets more support from the central bank than any other sector that operates in Ireland.
They're worth it.
Sorry?
They're worth it.
Well, yeah, but I think it's just an important point to make in terms of the level of engagement, the information seminars, CEO forums are set up sessions with the boards, the level of interaction, quarterly meetings with the representative bodies, the town halls, the roadshows that the teams go on, meeting hundreds of credit union staff, the information we publish, the guidelines, and as Patrick has described, actually having a dedicated team to support them in terms of business model development. So they get a huge level of support from the central bank because we think they have an important role to play in terms of their own responsibilities. But we also take our mandate in terms of the well-being of the sector extremely seriously.
Okay. Deputy Doherty has one short question before we conclude.
Just on the credit union thing, and I would welcome the opportunity maybe to do a focus on the credit union and have Mr. Casey before the committee and we go through some of this in detail. Two questions, both in relation to the credit union. Mr. Casey, I think you gave the impression there that credit unions should just be lending and all the rest, and there's no restrictions or regulations. Obviously, we as a committee know that there are. We did a very important report on this in relation to the restrictions, particularly about that the cap on the number of the amount of lending in a credit union shouldn't exceed 15% of loans that have a maturity of 10 years or more, which is a restriction. We called for that to be loosened. I know, Mr. Sibley, you gave a lecture in Trinity College and suggesting that is going to be loosened, and that was one of the calls from this committee last year when we issued the report. So first of all, can I ask in relation to give maybe if there's an opportunity, Mr. Sibley, to give a more detail in what is the proposals that you're looking to put out for consultation? And the second question I have is in relation to Mr. Casey. Is it now the case that one of the credit union movements have received all the authorisations that have been required from the Central Bank of Ireland to involve themselves in the housing sector? We understand that maybe CUDA that have passed all the tests and have met all the requirements. I think it was the Minister said one of the credit union movements is ready, it is through all the processes and has the money available. This was Minister English who was referring to questions in relation to the credit unions investing in social housing. So can you give the clarification to this committee whether CUDA or the League, it's one or the other, have actually been through all the processes and is ready and has the money available? So have you authorised whatever structure, model or SPV that they're looking at?
Sure.
Yeah, thank you.
Thank you. I heard both of your questions, and Deputy Doherty. So your second question in relation to a structure connected with social housing investment by credit unions in a Tier 3 approved housing body for the purposes of social housing. The Central Bank hasn't received any proposals from any third party whatsoever in relation to that concept. So we haven't been party to any discussions. We haven't received any proposals, nor am I aware of any proposals in that area. But I think, as Ed Sibley has alluded to earlier, we'd be delighted to engage with any of the representative bodies or credit unions who have a proposal to bring forward, but we haven't.
And it would require authorisation from the Central Bank?
We haven't engaged, so we haven't engaged on that particular topic.
But the question is, it would require authorisation?
Yeah, what's set out in the regulation is that it is to be a regulated entity or a regulated investment vehicle, is what's described. So it would need to, whatever vehicle is established would need to meet that definition. So to that extent, yes, it would require to be regulated.
So when I put to you the quote which was put on the Dáil record here was in response to a question, as I said, in terms of credit unions and social housing, and the quote is, one of the credit union movements is ready, it is through all of the processes and has money available. I cannot be any clearer than that. From your point of view, the Central Bank hasn't been involved in those discussions.
No. So, well, as of the information in the registry now that it's plausible that it's coming through authorisation through another part of the bank, and that it's an investment. It would be an investment entity. So, so we can check that and come back to you on it. The second, or your first question referred to lending. So clearly there is a responsibility for individual credit unions in terms of the decisions they make around lending with regard to the safety of their members' funds and their own risk appetite associated with that, and the common bond areas we've described. But Patrick's described a little bit already, but maybe to expand a little bit on what we're consulting on.
I mean, so we're planning to consult the sector. As you know, Deputy Governor has indicated this previously, and I mentioned earlier, but just to reiterate it, so we're proposing to remove the current 5 and 10 year maturity limits that are expressed as a percentage of loans, and that's connected with, rigidities that are well understood within the credit union sector. And from a prudential perspective, we see a degree of pro-cyclicality connected with, low loan-to-asset ratios in credit unions being prevented from lending long-term because they don't have significant short-term loans outstanding, and replacing those with tiered concentration limits for both house and commercial lending. And we're planning to consult in relation to this in the coming days. So we'll be sending a consultation paper out and seeking the views of the sector and sector representatives, and we'll share a copy of that consultation paper with yourselves. So I think that's what the Deputy Governor was referring to, as you put it, in Trinity recently. So it's
only that area that you're looking at, which is the 10-year, the 5-year and the 10-year rule. He's looking at the 15% as well, or would that remain in terms of the concentration of overall?
So we're talking about removing the existing maturity limits in the proposal and replacing them with new concentration limits for house and commercial lending.
And that would be based on tiered. Like, one of the biggest criticisms I have in relation to the regulation of the credit unions is that you haven't applied a tiered regulation. A one-size-fits-all is not the solution. It was argued here a couple of years ago that let's do this and let's then move to more tiered. Are we now going to be at a tiered, or is there going to be a flexibility for different types of credit unions?
So there's a tiering aspect to what's been proposed, in that those that are stronger and are capable of demonstrating that they have core prudential foundations will be given for increased flexibility, both in relation to house and commercial lending. And
the time frame for, I know the consultation will happen within weeks, but how long do you expect before decisions are being taken that we can actually see changes if there are to be changes?
Yeah, so we're anticipating publishing this consultation paper actually in the next day or two, so that is imminent. We will provide, it's probably just over a 2-month consultation period, just I suppose to facilitate people to provide us with submissions. We'll then go through an internal process in terms of assessing those, taking on various views. That normally leads to a process of refining proposals. That then needs to be taken through an internal process within the central bank itself. And then the last step in the process is the statutory consultation that we're required to undertake under Section 84A of the 1997 Act. So, to an extent, it's a little bit difficult to put a specific timeline on it because any piece of that process can take longer than anticipated. But I suppose our own broad plan would be that we would be publishing final regulations the second quarter, third quarter of next year. Yeah.
And to be clear, credit unions today can undertake commercial lending and today can undertake mortgage lending, and many do. And there also is inherent tiering in the proportionality that we apply in terms of the level of engagement, the approach to engaging with credit unions at different sizes of complexity, our expectations in terms of credit unions from a minimum standards perspective, and then what we expect if they want to do more, to more sophistication in terms of their business model. So there is very much proportionality, and by as a result, an element of tiering in the approach that we take today. I think your suggestion that we would spend more time focused on the credit union sector is something that we'd be very, very happy to accommodate.
Thank you. In that quotation, or that Dáil debate, it kept on referring to an October deadline. You're not aware of that?
It may well, because if it's an investment vehicle, it would come into a different area of the bank to the registry.
Okay,
so we will follow that up and confirm.
Right, that brings us to the end of this session. Thank you very much for your attendance. We'll now suspend for a few minutes and go into private session to deal with some correspondence, if the vote allows. Thank you. I want to begin by welcoming the Credit Union Managers Association, Credit Union Development Association, Air League Credit Unions, Irish Rural Link, Public Banking Forum and the Money and Advice Budgeting Services. You're very welcome to this meeting. Before I go to the opening statements, I want to advise witnesses that by virtue of Section 17(2)(I) of the Defamation Act 2009, witnesses are protected by absolute privilege in respect of their evidence to this committee. If you are directed by the committee to cease giving evidence in relation to a particular matter and you continue to do so, you are entitled thereafter only to a qualified privilege in respect of your evidence. You are directed that only evidence connected with the subject matter of these proceedings is to be given, and you are asked to respect the parliamentary practice to the effect that where possible you should not criticise nor make charges against any persons or entity by name or in such a way as to make him or her identifiable. Members are reminded of the long-standing parliamentary practice to the effect that members should not comment on, criticise or make charges against a person outside the House or an official, either by name or in such a way as to make them identifiable. I want to invite, there's a number of opening statements. Mr Nolan, Mr Johnson, Mr Farrell, Mr Boland, Mr May and Ms O'Connor. So we'll start with Mr Nolan, I believe. Unless you have arrangements yourselves as to who's going.
No. Okay. First of all, I'd like to open by thanking the members of the Joint Committee on Finance, Public Expenditure Reform and the Taoiseach for your kind invitation to meet with you here today. CUMA, the Credit Union Managers Association, represents CEOs and senior managers of credit unions in the Republic of Ireland and in Northern Ireland. Our members manage the daily interactions with a membership of approximately 3 million. In the Republic of Ireland, while the number of credit unions has declined in recent years due to mergers, the number of credit union offices hasn't. We still manage services across over 400 offices. Our services are delivered through a variety of channels, people to people, by telephone and online. We continue to evolve and improve these service offerings. We are the largest movement of cooperatives on the island of Ireland, owned and governed by our members and their representatives, and staffed by committed and highly qualified professionals. We are not-for-profit co-ops, born out of our communities and embedded in our communities. Our service to our members, the overwhelming majority of the public, is driven by the member interest of that element of the Irish public. We are and remain the original public interest financial institutions operating in the financial services sector. We are undoubtedly pleased that for 4 years in a row, credit unions have been voted #1 for customer experience in the CXI Ireland Customer Experience Report. This has never happened anywhere else worldwide. This is a tribute to the member-centric service culture of our 4,000 staff members and of our directors spread throughout urban and rural Ireland. For over 50 years, we have delivered excellent service in our communities. We have responsibly built up our reserves and our expertise. We have quietly and purposefully provided savings and loans facilities, have survived recession without any bailouts, and are expanding our loan books again to meet renewing member demand. We enforced member care before mainstream banking had customer care imposed on them. We adopted and adapted to regulation when it was imposed. We adapted to accelerated mergers. We are adapting to new demands as our members' need change. Throughout that time, we continue to deliver our core business. Since our inception, we have lent money for personal purposes and for commercial purposes. We still do so today. Looking at the issue of commercial lending, loans for commercial purposes have been part of the lending portfolios of credit unions for very many years and still are. The 2016 credit union regulations gave greater definition to commercial loans and limited commercial lending to 50% of the credit union's regulatory reserve, which is equivalent to 5% of the overall assets of the credit union if that credit union holds the minimum reserve requirements. In March 2015, commercial loans accounted for 1.9% of the existing 4.5 billion credit unions have out on loan. This is equivalent to 0.51% of our assets. Given that we could be lending up to 5%, or more where higher regulatory reserves exist, there is considerable headroom in credit unions for greater levels of commercial lending in suitable circumstances. Credit unions do have a public interest and a member interest to serve and must lend responsibly. We need the frameworks, policies, procedures, systems, personnel and expertise to continue to lend responsibly, including when we are lending in the commercial domain. These standards should apply to all financial institutions and to other entrants in this sphere. There was in the past and currently is a willingness to address the standards expected by regulation. There is an expectation and evidence of increasing engagement by small local businesses with credit unions. We are open for business and anxious to engage meaningfully and responsibly with the members and future members of our community, and we would extend an invitation to the commercial aspect of our communities to come talk to us. Thank you very much indeed.
Thank you very much. Mr. Johnson.
Mr Chairman, members of the committee, CUD is grateful to you for inviting me to this discussion on the recently published report on local public banking in Ireland. CUD was formed in 2003 and represents many of the largest credit unions in the country, and also provides a wide range of support services to them and to a growing number of credit unions throughout the country. In its early days, it was a representative voice on behalf of its owner member credit unions with legislators and regulators. It has since evolved, and now, as well as providing a voice, it is increasingly providing support facilities in the areas of regulatory compliance, risk management, shared services and competency development. CUDA, which also manages the Solution Centre, has a vision for a credit union system in Ireland that builds on being the trusted source of financial services for members, that helps shape the society we want to live in through financial education, provision of credit for small businesses and community purposes now and for future generations, that can continue to provide loans for members' individual, everyday and longer-term needs while dramatically expanding the points of access to credit, that can continue to provide secure savings through enhanced investment options, and that offers real choice to people for their financial needs. This is a comprehensive vision, and we have already delivered on several aspects, such as our mortgage support framework, a wide range of digital channels and digital engagement facilities, a green energy better home partnership. We continue to seek solutions to enable credit unions to contribute to resolving the housing emergency, and are well underway to deliver on other product and process solutions, including lending to small businesses. We have studied the report and agree with the statement that credit unions are looking to play an increasing role in the Irish retail financial landscape into the future, and the Central Bank is assisting credit unions in developing their business model. This may also provide a channel for increased lending to the rural SMEs, in some cases subject to the capacity of individual credit unions. Indeed, this is a key component to the societal element of our vision. The continued success of the SME sector to Ireland cannot be underestimated, with almost 250,000 micro and small enterprises and 43% of private sector employees working in these small firms. Many small business owners will be an existing member of their local credit union, and we firmly believe that their success and the continued success of credit unions are inextricably linked. This has always been the case. In the 1950s, faced with massive youth unemployment, a group of people formed together around the idea that the solution to the crisis was cooperative self-employment, but there was no money with which to start and grow businesses. Speaking in 1982, Reilly, one of the principal founders of the credit union movement in Ireland, said, "The object in promoting the credit union idea was to show the people how to accumulate that money and from their own savings and resources." The report defines public banking as where a state or other public actor owns a financial institution, and that the purpose of the report is to investigate the possibilities of local public banking in Ireland based on the Sparkhazen model, including how it might operate to evaluate its potential in an Irish context. Furthermore, it states the ethos of Sparkhazen is not profit maximisation, rather it is public interest based, promoting financial inclusion and economic development within their regions. We could easily, in that statement, replace Sparkhazen with credit unions, and we have an excellent summation of the objects of credit unions contained in Section 6 of the Credit Union Act. The report states that evidence suggests applications for credit by SMEs is falling in Ireland, and conversely, the supply of credit both to SMEs and retail customers is increasing. But are prospective customers receiving fair value? Back in November 15, speaking at a Small Firms Association event, the previous Central Bank Governor, Mr Honohan, questioned the absence of interest rate reductions, wondering whether this was as a result of limited competition in the sector. "We could all do with more competition in the banking system," he said. CUDA believes that credit unions are naturally positioned to bring that competition to the market. Credit unions are expert at providing consumer loans, savings and payment facilities, loans to owner-managed businesses. We are witnessing more credit unions providing home loans and are working on bringing extended current account related facilities to market. In the Solution Centre, we have also focused on making it easier and more convenient through the use of technology for members to engage with their credit union. The report correctly acknowledges that credit unions are looking to grow their services to small and medium-sized business, and in doing so fulfil their role as an action group for community development through mobilising local resources for investment in the small firm economy. An essential ingredient of this development is the review of credit union lending term and category limits. In November 17, the CUAC Review Report Implementation Group forwarded a detailed submission to the Central Bank, and we wish to express our thanks to all stakeholders in that group, and in particular to the team at the Department of Finance for their very supportive work in this area. It's also very encouraging that a consultation paper reviewing these limits is imminent from the Central Bank of Ireland, and their recent references to this has been very positive. The report correctly recognises that the credit union sector is active in the Irish SME lending market, and therefore we believe that the independent external evaluation being commissioned by the Department of Finance should focus on addressing the elements that will facilitate credit unions to deliver the benefits anticipated from a local public banking concept. These will include: 1. Utilise the credit union network and prudently use member savings for the productive and provident purpose such as loans to the SME sector. To this end, we will work with other stakeholders to bring the expertise to a model that enables credit unions bring a range of standardised credit facilities prudently to the market. To assess how the attractive interest frequently referenced in other jurisdictions might be replicated here, and how this can be provided in a sustainable manner. The third item is recognising that not all credit unions may have the capacity to provide these facilities. Review the common bonds legislation to enable such credit unions to introduce members and/or to collaborate on such loans with other credit unions. And finally, ensure a level playing field by regulating peer-to-peer lending to ensure protections apply to consumers of crowdfunding, and that the Central Bank of Ireland's codes of conduct and the protections which they provide to consumers should apply to crowdfunding platforms, in a similar manner that providers of PCP finance should be subject to the regulatory requirements that credit unions must meet. So once again, Chairman, thank you for your kind invitation, and look forward to addressing any questions we have.
Thank you very much. Mr. Farrell.
Mr. Chairman, and thank you to your committee for your invitation today. On behalf of 250 credit unions operating in over 500 communities, may I say at the outset that we are an Indigenous, local, democratically led, volunteer-based cooperative financial movement. Credit unions, the credit union ethos, the fact not just of accessibility in the community but of being locally led is the already embedded cornerstone of what our country needs and of what people want locally. This meeting today is further to the publication of the Government's report on local public banking in Ireland. From a credit union perspective, it also takes place in the context of this committee's own unanimously agreed report on the review of the credit union sector last November. We are also meeting in a specific political context. The Confidence and Supply Agreement has concluded. The QAC review process is concluding, and credit unions are looking now for a move on from aspiration to action. The commitment to develop a strategy for the growth and development of the credit union sector is long in gestation, and if fulfilled is the local public banking service that communities need. The challenge now, and it is essentially a political one, is whether kind words of reassurance are going to translate into political prioritisation. The challenge credit unions face is the challenge for the development of a more localised banking and financial services. That we are ambitious to lead is not any lack of goodwill, it is the much scarcer commodity of determined prioritisation. In your own report, Mr. Chairman, this committee recognised that the common bond structure inherent in the credit union movement is essential in underpinning the community and democratic base of credit unions. The common bond is the essential fabric of what binds community and credit unions together. Its continuance is correctly supported by the committee and is clearly the obvious foundation stone for enhanced financial services delivered at local level. In a world of globalisation and homogenisation, there is consolidation among credit unions. There is also a continued enhanced level of service provided by credit unions in over 500 separate communities. Because we are membership-based and cooperative, we have values that banks do not. Because of our common bond, we are a real community of members saving together and lending to one another. A mark of our values is that for the 4th year in a row, Irish credit unions have come first place in the annual Customer Experience Awards, which were announced last week, the 16th. Customer experience is measured by how customers perceive an organisation's brand through their interactions with its employees. The fact that credit unions are the only organisation in the world to win this accolade in 4 consecutive years speaks for itself. The next step to deliver financial services locally through credit unions is to deliver now as the QAC review process concludes on the commitment to develop a strategy for the growth and development of the credit union sector. The Welcome Report on Public Banking is a backdrop to inform that development, as is the excellent report of this committee. A strategy of itself, however, will not be sufficient. Any strategy worthy of the name must be accompanied by an implementation plan. And implementation, to be effective, must marry policy driven by the Department of Finance with regulation, which is the responsibility of the Central Bank. Any initiative which falls into the void between the two, a void where credit unions have already spent too long, is pointless. Political prioritisation must be accompanied by effective means to translate aspiration into action. This has to be the critical move on required to progress this issue. And credit unions have been moving on. For example, among other things, credit unions are now processing electronic payments and issuing mortgages. These are significant and welcome developments, but the scale of what we can do is severely restricted by regulation. Our aim is to deliver current accounts and debit cards and support our members with the full range of services they need on a day-to-day basis. We are ambitious to deliver more lending for SMEs and family farms, and we are ready to invest in social housing as asked by government. Mr. Chairman, local public banking is an idea whose time has come. I can tell you today that the foundations are in place, and those foundations are credit unions. Thank you.
Very much, Mr. Farrell. Mr. Boland.
Thank you, Chair. Thank you for inviting Irish Oireachtas to present to this. Just to note, Irish Oireachtas is a national voluntary organisation representing communities from Donegal to Kerry, from Galway to Wicklow, across the Midlands, and we are very proud to have and are involved in this proposal. As you know, we made an extensive submission to the consultation process investigating a local public banking model for Ireland, and we appreciate that the joint report on the local public banking has taken this submission into consideration at great length. Irish Oireachtas are delighted that the report recognises the merits of public banking models and that they have listened to our arguments as to how this will add the financial stability of our regional economies. However, we have responded to the report in a formal rebuttal, as we found some misunderstandings within that report with regard to our proposed model, and I've included a copy of that rebuttal in the submission to this committee. I would draw your attention to 2 areas. Particularly, we were disappointed in the lack of understanding shown in the local public banking report. Competition in the banking market and the Sparkas model and how it differs from the pillar banks. We are particularly disappointed with the view in the report that an Irish public bank would risk crowding out the private sector institutions. The government has often stated a desire to increase competition in the banking sector, so it seems counterintuitive to be afraid of the effects of introducing competition, apparently on the basis that it would reduce the oligopoly profits of existing market players. And we would note that in the past, we did have the ACC and the ICC, who played an enormous role in the development of the economy of Ireland. It is also unfortunate that the report had some inaccuracies in relation to their understandings of the Sparkus model and how it operates in Germany. There was an invitation extended to the officials carrying out the investigation to visit Germany to see at first hand the model in action, which they did not avail of. So we are delighted that Irish Rural Link and our partners were able to facilitate members of this committee to take part in such a visit, and we are confident that this has substantially enhanced the committee's knowledge of the operation of the model. Coincidentally, my colleagues Sinead Dooley and Noel Kinahan are just back from such a trip with the Enterprise Innovation Committee, which I'm sure was equally well received. We are very much looking forward to participating in the stakeholder forum as part of the independent external evaluation referred to in the government's report. We should note that we have submitted our belief and our ideas for the terms of reference, and we are awaiting a reply to that. We are also, I'm sure that they will provide opportunity for IRL and other stakeholders, which we very, very much welcome, some of them here today, the credit union movement, and we are glad to see we're glad to see that they will participate, hopefully, in that process. We make it clear that this is an opportunity to bring, by adopting the model of public banking, an opportunity to bring another dimension to our banking sector in this country. It is not a new idea. We have had it before. And Irish Rural Link, which has no vested interest in this, only wants one thing. It wants to ensure that the well-being, financial and social, of rural Ireland continues and is not lost or is not dependent on the current pillar banking system. We would welcome any questions. Thank you.
Very much, Mr. Vaughan. And Mr. May.
Thank you, Mr. Chairman, members of the committee and staff for inviting us along today to make this presentation. Given the brevity of the presentation and the fact that Irish Rural Link has adequately dealt with the micro issues in its rebuttal letter, we intend to devote our time to highlighting the macro issues involved in the joint consultation group's abject failure to adequately inform government of the machinations of the banking industry in terms of regulatory failure, credit creation and the monopoly thereof by the pillar banks, the difference between creating credit for the real or productive economy and creating credit for financial transactions, and why, for example, Basel I, II and III regulations don't and cannot work effectively, why another financial crash is considered by many as inevitable, why artificially high interest rates being charged by our current pillar bank oligopoly are wholly incompatible with driving our indigenous economy, the imperative to introduce competition in the Irish banking sector, the illegal suppression of our credit unions and the fallacy of turning our post office network into an agency bank for the benefit of pillar banks and not postmasters or communities. It is worth remembering that a partnership banking arrangement with An Post has already failed back in about 2010. Now, the consultation groups or the government's report incredibly has failed to take into account Article 45 of the Irish Constitution, which deals with competition and specifically states in Section 2, subsection 4, that in what pertains to the control of credit, the constant and predominant aim shall be the welfare of the people. We ask why Government, the Central Bank and Department of Finance repeatedly put the interests of pillar banks before those of the people, the indigenous economy and the general socio-economic well-being of our country. And in that context, we might quote Professor Steve Keane of Kingston University, London, when he said that ultimately the financial sector should be the servant of the rest of the economy, not the master. But at the moment, it's the master of not just the economy, but of the politicians as well. So to break the nexus, we need a complete political shift. And furthermore, back in the 60s, economist George Stigler coined the term regulatory capture to describe big business domination of regulatory agencies through lobbying and selective formation sharing. He claimed that regulatory capture is endemic and that regulatory agencies tend to be understaffed, unaccountable and peopled by bureaucrats, many of whom are drawn from the industries being regulated, who see themselves as partners with industry rather than its overseers. We should also refer to economists Daniel Kaufman and Pedro Vincent's paper titled Legal Corruption, published in 2011, which describes legal corruption as taking many forms and includes cronyism, patronage and state capture, when powerful groups manipulate policy formation to serve their own interests rather than the public interest. Currently, Irish pillar banks have a monopoly on the creation of credit, which puts them in effective control of the economy. They decide how much money will be created, who this money is lent to and for what purpose. There is no effective control over bank lending. Pillar banks continually lend for speculative purposes, which in turn leads to asset bubbles, such as the property bubble which brought about the financial crash 10 years ago, while investment in the productive economy is kept to a minimum. The Basel regulations, which include Tier 1 capital requirements, incorrectly assume that banks act as financial intermediaries. That is to say that they accept deposits and lend said same deposits out again, when the reality is that the banks are creating money largely for speculative purposes with virtually no cap on credit creation, which in turn leads to very high short-term profitability, but also inevitably creates asset bubbles and ultimately too big to fail banks. This, at least in part, explains why banks are not lending in any meaningful way to SMEs, micro-enterprises and farmers, and where they are, there is no ceiling on interest rates being charged, meaning that Irish consumers pay the highest interest rates in Europe. This situation, where pillar banks can charge what they like, continues to go unchecked and unchallenged, mainly because government and a captured Department of Finance refuse to countenance competition in the banking market. These high interest rates only apply to those who succeed in obtaining credit from pillar banks, but the reality is that banks are simply not lending to the productive economy. There is ample evidence of this in various ISME reports, together with a host of anecdotal evidence from farmers and SMEs. The figures, as reported, are exacerbated by the fact that many customers are actually being informally refused before they go to make a formal application, and these refusals are not taken into account in the official figures. Indeed, current Minister for Community and for Rural and Community Development, Deputy Michael Ring, has acknowledged the roadblock facing the indigenous economy, arising from the behaviour of the pillar banks. Last April, Minister Ring had this to say: "There is a problem, and I am hearing every single day as a rural deputy, not as a minister, how banks are dealing with customers. We do need a bit of competition in the market. Banks have certainly lost a sense of what they used to do and are certainly not there for the people anymore. They are there for themselves, not for the ordinary general public who need banking services." Now, prior to submitting our detailed proposals to the joint consultation group, we had been engaged with the Department of Finance and the then Minister for Finance, Michael Noonan, and had made proposals in relation to public and community banking. But both parties had responded to us saying that public and community banking would bring no additionality to the financial sector and to the needs of Irish consumers and small business. So, in many ways, the views put forward by the consultation group in its report were to be expected. It could be interpreted that the outcome of the consultation was a foregone conclusion, and the consultation was just a mechanism to fulfil government commitments made in the programme for government. More commitment is needed. The consultation group makes multiple reference to the Strategic Banking Corporation of Ireland. We have dealt with the SBCI in detail in Appendix 2 of our presentation to the Oireachtas Committee on Communications, Climate Change and the Environment. Suffice it to say that the Strategic Banking Corporation of Ireland is merely an on-lender, and the bulk of its loans are going to pillar banks, over 700 million to date. This strategy merely further consolidates the oligopoly enjoyed by the pillars and allows them gouge huge profit margins from further on-lending, whilst 80% of funds on-lent are guaranteed by the bank, by SBCI. The funds provided to SBCI should, at the very least, have been made available to the credit unions and post offices, or could, more prudently, have been used to assist in setting up public and community banks. As stands, the Strategic Banking Corporation model borders on the provision of illegal state aid to the pillar banks, while post offices and credit unions continue to be suppressed. In conclusion, the real problem is not funding, it is culture. a culture of reverence to the pillar banks that do not serve the public interest. This is the fundamental that must be changed if Ireland is to build a self-sustaining indigenous economy. Western countries are now realising the folly of allowing too big to fail banks and dominate their economies. In Canada, the 4 larger credit unions have now banking subsidiaries, and there is a clamour to reintroduce postal banking to the country's 6,000 post offices. In the US, the former presidential candidate, Bernie Sanders, has just introduced the Too Big to Fail, Too Big to Exist Act, which provides, among other measures, for the breakup of the US banks that have a total exposure of more than 3% of the nation's gross domestic product. It is now time that Ireland took the lead in financial and banking reform. This can start with quickly convening the promised stakeholder forum, setting a tight timeline and bringing in the requisite experts in the field of finance and financial reform to assist stakeholders in arriving at long-term workable solutions in the public interest. Thank you for your time.
Thank you very much, Mr. May. Ms. O'Connor, please.
MABs very much welcome the opportunity to participate in the committee's consideration of the substance of the report, financial inclusion and related matters. The report and the submissions point to a variety of concerns to be addressed in the development of banking and financial services in Ireland. It touches upon many issues currently pertinent in our casework, including the role of banks in the lives of our clients, the potential role of post office and credit unions to meet their needs, access to affordable credit, potential of fintech, unresolved issues in the mortgage market and developmental opportunities for people and communities currently underserved in their consumption of vital financial services. We view the goals of the proposed local public banking model positively. However, MABS brings a focus on a wider segment of the population. We have a sense of the factors which lead to financial exclusion in day-to-day access to banking, the availability of accessible, expedient and low-cost payment mechanisms and affordable forms of credit, or having the capability to extract best value from increasingly complex financial products. Many have come to distrust banks and are increasingly wary of any potential toxicity in the financial products they consume. Therefore, while welcoming innovative initiatives that seek to include specific groups in the productive economy, we would not wish that only a partial solution emerges to issues which are, in our view, widespread and systemic. Since the recession began, MABS has assisted in the order of 250,000 households through its face-to-face service. Virtually all of those have experienced a breakdown in their relations with providers of financial services. We have strong links with credit unions in order that our clients can build a bridge back to affordable and sustainable credit. We have worked with all the main banks with the aim of re-establishing productive relationships. We are dealing, however, with a changing client group. A higher percentage is waged or self-employed. There is an older age profile and their debts are more substantial. The landscape is changing, making our work for our clients more difficult and our concern for their future access to affordable, simple and reliable banking and financial services more acute. Much positive progress has been made towards the goal of improving the banking and financial services environment. Notwithstanding this, we have a view that the banking, payments and credit needs of atypical consumers have not been given sufficient attention. Many of our clients have impaired credit ratings. They are not necessarily high-risk consumers, but viewed from the perspective of a remote and centralised lending unit within a commercial credit institution, they may face barriers in accessing affordable credit. High-cost credit is a poverty trap. We have seen the damage caused by subprime lending. Other solutions are needed, and the report and the proposal is to be welcomed in its proactive search for such solutions. Deep and widespread social and economic scarring exists as a lasting legacy of the recession and the banking collapse. Some have achieved solutions, but those whose loans have been classified as non-performing and sold on to funds are a significant ongoing concern for MABs and other stakeholders. The sale of NPLs represents a severing of relationships between banks and their customers. For many, the distress of a loan sale is compounded by not knowing what may come after whatever resolution is achieved to their mortgage arrears. They have a real concern about how they will bank and what, if any, access they will have in the future to affordable credit. In its submission on the report, CUDA rejects the idea that credit unions be relegated to acting only as the poor man's bank. We likewise would disagree with such a proposal. If, however, for the purposes of today's discussion, the poor man may represent someone who lives on a low income or who has experienced a reduction in their income or who has some fragility or unpredictability in their income as a consequence of the nature and type of their employment, but who nonetheless plays a productive economic role and needs to have access to affordable banking, credit and payment systems, then we need a bank or a financial services provider that will meet all of those needs. Perhaps local public banking can be a potential partial solution. We know also from debt advice agencies in other jurisdictions that local public banks and debt advice agencies can work effectively together. We would like the opportunity to contribute to a more in-depth appraisal of how debt advice could be married in a practical and sustainable way within a proposal on local public banking in Ireland. The report makes reference to the potential of fintech, and we feel strongly that this needs further exploration. And we welcome, therefore, the Department of Finance's statement in the report that emerging trends such as fintech will be kept under review for their potential to develop initiatives that could deliver credit in a more effective and less costly manner. We see scope for a sandbox-type regulatory regime that could exploit both fintech and regtech to the benefit of our client group, reducing costs and facilitating access for the types of consumer we have described previously in this paper as atypical and potentially underserved by main banks and financial institutions. Thank you.
Thank you very much. Can I just ask, before we start with the credit unions, in the last session, we asked the central bank about the obstacles in the way of the credit unions almost fulfilling the role of a community bank. That they had lent 90 million and that they could lend, was it 900 million, they said. They could do it with business, mortgages and so on. What's the obstacle? If there's no obstacles, according to the central bank, for you to do that, can you outline what the obstacles are? Deputy Doherty raised the question with them also. So why can't the credit union, with 7 billion, we're told, in the bank, let that money find its way into the economy, into housing, into business, into loans and so on?
There are rules and limits within the regulations, so there is an amount that they are allowed to lend for longer term loans, I suppose. So the mortgages and most of the bigger business loans would be the longer 5-year plus loans. So we're allowed to do 10% of our loans for in excess of a 10-year period. We're able to do 20% for an excess of a 5 to 10-year period. So credit unions, I suppose, post the recession and the global financial crisis are emerging and are coming into that space. So the representative bodies, I suppose, are helping credit unions into the mortgage and the home loan space. They're helping them into the SME space as well, but it does take time to develop expertise. A lot of the expertise in credit assessment, if you like, for mortgages and more particularly for business lending, I suppose, retired during the global financial crisis, through the recession, from the other players, as it were, that got themselves into bother. So we are all working hard to increase the amount of lending within the SME space and within the home loan and mortgage space. We have put proposals to the various departments and to the central bank about centralised vehicles for both of them, but they're not taking, they're not finding favour, as it were. So we engage with the Department of Enterprise and Innovation, we engage with the Strategic Bank, but they are not, I suppose, they have funds from other sources. They're not looking to cooperating or facilitating or collaborating with credit unions more into the SME space. The central bank changed the rules this year for investment centralised vehicles, so they did take on board the social housing piece. They didn't take on board the concept of a central vehicle into which credit unions could invest money for onward lending then from a centralised, more risk managed position, if you like, than individual credit unions who, by and large, wouldn't have the underwriting skills or develop them to a point that they feel confident enough, I suppose, to doing the bigger SME lending on their own back and putting it all at risk on their own balance sheet. So some centralised vehicle would be a safer way and a way of sharing risk. But as I said, the bank haven't endorsed that one. It's more they're looking to each individual credit union doing it individually, which is a slower way, we feel.
Well, can I just ask you, in relation to the last question and the response which the central bank gave, which essentially was they can lend money away, they've got lots of ways of doing it, and they also said that out of all of the financial sectors, they devote more time to the credit union sector than any other sector in terms of giving them supports, giving the credit union supports. So could you provide the committee at some stage after the meeting the list of problems that you see in the context of the credit union developing its space relative to the answers that were given by the central bank? Because there seems to be a difference of opinion or a difference of emphasis. And can you maybe say why the Sparkison model cannot be rolled out by the credit union movement? Like, you have 7 billion, so why can't you step up to the plate, work with Sparkison, roll out that model of community banking, get the licence from the central bank, and so on?
Well, if I just could come in there, there is considerable headroom and considerable scope for business lending in terms of, at the minute, 0.51% of our assets are in commercial lending. And we have been doing commercial lending, and we certainly were doing commercial lending up until 2011 and 2012. And at that stage, there were a number of restrictions placed upon credit unions. Many of those have now lifted, but not all of them. So there is still considerable headroom there to do lending, but we need to be realistic here. If one is to engage in something like commercial lending, one has to have the structures in place. One has to have one has to have the staffing, one has to have the risk appetites and the risk management capacity. Those are not something that are built overnight, and those are not something that you can just plug in and play with. And certainly in the last number of years, in the last 2 years in particular, a lot of advancement has been made in those particular fields. So it's not. It would be inaccurate to say that advancement isn't being made there, and there are credit unions seriously addressing those areas, who are engaging as well with the central bank in those particular areas. But there is no simple plug and play model. Public banking, for whatever term you put on it, is not something you can just dream up, plug in, and it goes tomorrow morning. There's 50 to 60 years of experience. We've got some things wrong, but we've got most things right along the way, or we've got a lot of things right along the way as well. So it's not simply a question of plugging in and playing. And as Ed was saying there, my colleague from the Irish League of Credit Unions, there, and again as Kevin Johnson was saying, there are serious efforts going on behind the scenes of cooperation between the cooperatives, between the credit unions, to actually fill those gaps. and as our colleague there from MEBS made mention there of dealing with issues like impaired credit ratings and stuff. These are very much part and parcel of the landscape in a reinvigorating Ireland that we have to deal with, not only on a personal level but on a commercial level as well.
Could I just make some observation on it as well? It's just when we talk about the credit union movement in Ireland, at times we can think of it as one single entity, and that's why there's, and I think in fairness that's what Tim's referring to there, is that the comparison with something like a public banking model isn't a simple direct comparison. We've 261 independently owned and independently regulated entities, and what we found in the past was that as we started to broaden the offerings from the basic consumer loans to things like home loans, there is a degree of expertise, systems, everything to support that. And where we initially ran into a problem was that the limits that you referred to made it very difficult for any one credit union to do it on their own and to do it in a sustainable way on their own. So it has encouraged and enhanced a lot more of the collaboration, and we certainly have seen that. There are some different approaches to how that might work, but overall, if it ends up offering a wider range of service and a better proposition for members and the wider community, well, then it is a good thing. The one sort of point I would make when we talk about the regulator, we have a job to do on the credit union side. The regulator has a job to do on their side, and what we have to do is try and extend that collaboration into that space as well, and find that we're not doing anything to the detriment of each other, because ironically we both share the same vision, which is around protecting people's funds and using those savings in a productive manner. So I wouldn't like to think that it's all about confrontation with the regulators. I think it's about trying to find a way to work together.
Senator.
Welcome. I suppose I just want to explore, because there's been, for as long as I've been involved at national level, there's been discussion on expanding the role of the credit unions. So we had Ed Sibley and his staff and the regulator for credit unions in earlier, Patrick Casey, and they effectively told us, as far as they were concerned, there wasn't an issue in terms of the capacity of the credit union movement to lend both to the SME sector and to home loans. So Tim Molan, you make reference to the point they made, which was that there's the capacity to lend up to 50% of the credit union regulatory reserve. Roughly, I think is about just short of it, probably £1 billion. There's 90 of that currently being lent. There's 900 million available. They believe there's capacity in the home loans as well. So I suppose what we need to really find out here is, I believe we're very supportive of public banking and credit union expanding into that role. We need to actually we need to get down to hard facts here. So the question is, does the credit union movement at the moment have the capacity, first of all, to increase SME and home loan lending? Number two, are there any regulatory issues at the moment that prevent you? So we have the central bank saying that you have the capacity to lend up to 50% of the credit union regulatory reserve, which you, Tim, say is equivalent to 5% of the overall assets. So is there something else in there, and Ed Farrell touched on it there, which basically makes that particular regulatory capacity that the central bank tells us unworkable for the credit unions and to actually meet those targets? Because there's no point in reinventing the wheel if the actual wheel itself is just maybe a small bit rusty and needs a new tyre. It may not require us to reinvent the wheel. So could we just get down to the capacity of the credit union movement within the existing rules to lend to the SME sector and lend to the home loan sector? And how does that marry with what we've been told by the Deputy Governor of the Central Bank, Ed Simley, and the regulator of the credit unions, Patrick Casey, earlier. That's it.
Okay. First of all, the point I was trying to make about the 261 individual entities is that when you start talking in aggregates, it's irrelevant. It means absolutely nothing. So if you have one credit union that's not in that business at all, they have 100% capacity, and somebody else who's actually doing it very well and prudently could well be tipping the ceiling. So to blur them together and say there's 50% capacity is meaningless.
Okay.
So I think that's what I was trying to get at about they are individual entities.
Fine.
So I think then in sort of...
So would there be individual credit unions out there at the moment who are lending 50% to the commercial loans, to the 50% of their credit of the regulatory reserve?
No, I think it's fair to say that there is capacity there, and I think in fairness, Tim.
Yeah, but you see, Mr. Johnson, the problem here is we're talking. The problem for me at this point is I've kind of reached a point at which I want detail. I'm utterly supportive of the credit unions,
sure.
But the problem is that we need to get down to brass tacks here. We need to know, do you have the capacity or not within the existing regulatory rules to make SME lending? Or is there some barrier, and the Chairman alluded to it earlier. It was the exact question I was going to ask, because it's the only question that we need answers. It's the main question we need answers for. So the credit union, the regulator was implying that the capacity was there and the credit unions weren't increasing the lending. We need to know the real facts here.
We know on the home loans, because we proactively work with a group of credit unions to support them delivering home loans. And we know that a number of them now, because they've been doing it for the last 14 months, are now starting, when they look at the pipeline, they're starting to see they're hitting the limits.
Okay.
Now, this is where it brings in, and this is why the consultation paper that's due out in the next few days is so...
That we were within the Cuda family, we're talking.
Well, yeah, there's other models as well to help credit unions do that as well. But there's... those number of credit unions, and we know of others who got there on their own merit in the past as well, and then literally had to stop because they've hit the ceiling. Now, trying to tell them that the overall average has capacity, that's what I'm trying to say, is meaningless. So there are, and it is, to be clear, of the 261 credit unions, it's a relatively small number that are getting there, but it is growing. And we have to. There's no point in waiting and having to shut down shop and then start all over again.
Well, can I hear from Mr. Farrell and Mr. Moreland, because you're at the front line. Mr. Farrell,
yeah.
I mean, what's the real story here?
Oh, that's not the real story. There is I suppose like the speed limits on the road. There is capacity there. The rules allow credit unions do. The 50%.
Yeah.
Some are further down. I mean, credit unions, I suppose, started back 60 years ago, and it was very much in the personal space. So there is no automatic assumption that credit unions will do any SME lending. They have been doing some. They probably had done more before the crash and wound it down, and there would have been restrictions certainly that time from the bank to exit commercial lending, but they have got back into it. But there is no... You know, it's not a mini version of the ICC or the ACC banks that were mentioned. 90% of the lending is personal lending. More of it in recent times going for mortgages within the same rules as the banks, at the same macro-prudential rules. So mortgages, I suppose, to working people, a safe enough set. The SMEs is a riskier set. So, as I say, some credit unions, as Kevin says, are further down the road of making that offering. Some are probably not going that road at all. I mean, back to the Sparkassi thing, I mean, it was the foundation arm of Sparkassi that were over. We met with them a good few times. The credit union movement has its own foundation, so the credit union movement in Ireland has a foundation which goes to African countries and former Russian republics to help them build credit unions. And we kind of asked the Sparkassi and foundation people, could they help us with more SME lending and some debit cards, because the current account debit cards,
But Mr. Farr, within the
they
existing...
haven't yet.
I'm not talking about sarcasm. I'm talking about, do the existing rules and regulations, do they provide the capacity for the credit union movement to grow SME lending without having to bring in new regulations or reinventing the wheel?
They do, yeah.
Okay.
The current rules allow individual credit unions to do more SME lending.
So then, therefore, why then is the level of commercial lending at only 1/10 of the capacity at the moment overall? Allowing for the individual factors that Mr. Johnson is saying, with maybe individual larger credit unions moving into that space, why does it appear to be so low?
Well, as I say, it's not something that some credit unions do at all. We are only, and I mean, it depends how far from the capital city and the other cities you go. I mean, the economy is flying, but it's not flying as much.
And what do you believe?
Further.
What do you believe is the route to increase SME lending, increase home loans in the credit union?
Some help, I suppose, in the de-risking of it. So, as I said, we had talked about a centralised facility. Failing that, as I say, we had reached out, come back to the Chairman's comments on some of the visits from Sparkassi to see what their foundation arm would Sparkassi help credit unions by showing them their SME lending in Germany, help the credit unions here. We had maybe introduced the concept of the county town, as we would call them, the bigger geographical credit unions becoming brokers or agents of the strategic bank. But
so it's about de-risking.
It's about the de-risking and giving us the confidence, I suppose, because a lot of that expertise has retired out of the banking sector since the recession. Now, there are some of them still around, but it's to give everyone the confidence that if we're starting into what will be a pretty new business line for us, that it's done correctly. Now that we've, the world has learned.
Mr. Moran, unfortunately,
there are, we'll say, a few issues there. First of all, there's the area of the classification, and we just may have a little bit of a statistical understatement here, because for a start off, the issue of the classification of business loans only arose after statutory instrument 1 of 2016. And that brought a lower entry level at 25,000. Now, in practical terms, that had meant, and we actually have a significant number of amount of lending to small enterprises that is under 25,000, a surprisingly large amount, which doesn't actually get reflected in the most recent set of statistics, which were for March of 2018.
So they put a limit, anything above 20, it had to be 25 or above to be classified as commercial?
Yes. So that's actually
that would strike me as
a statistical thing. No, there is, but it's kind of like there's swings and roundabouts about that. In that, when you go above the actual statistic, or go above the entry level, the 25,000, the level of regulation that there is surrounding an application for, let's say, 28,000 is very significant. I'm not saying that it's wrong. It is actually very it is very risk averse and very prudent. But you do actually get a much higher level, higher bar to be addressed there. And again, as my two colleagues were saying, there are two ways in which this can be enhanced. One is through the hard road, as in we build up our skill sets, and we do that within our own individual credit unions.
Organically.
But what would be very useful indeed would be the ability to be able to use essentially CUSO's credit union service organisations to actually help with the underwriting. The underwriting is the most serious part of this, and whether we like it or not, we have to do our underwriting well. we are of no service to anybody starting out in business or engaged in business if we do not do the underwriting well.
So it's about skill sets and de-risking.
There's two things that we need to do, and again, I would say that again from somebody working on the front line, there is an uptake in commercial lending. There is an uptake in demand, and those are things that have to be acknowledged, and it is our job as we are not for profits.
Okay.
It is our job in terms of, and it's in our vested interest as credit unions that small businesses would prosper in our communities.
Thank you. Sorry, Richard.
Before we proceed, I'll let you in. I'm deputising for Deputy Michael McGrath here today. The Chair has asked me to step in here. I presume that's all right with everybody? Okay. Yeah. Mr. Johnson, you want to make a comment?
No, just a very quick point. When you mentioned about capacity, like we know the financial capacity is there. There are different ways of addressing the expertise issue on the capacity. The other one that it was your question about how do you sort of take the credit unions and just make that into and address all the benefits of a public model?
Yeah.
Well, obviously, there is another issue we have to look at, which is access. So we have to make sure that we do have a nationwide offering so that people, irrespective of the common bond they're in, we can find a way that the credit union system can support them. So that's more of a legislative rather than a regulatory matter, but that is an issue we need to factor into this as well.
Thank you very much.
Thank you very much, Mr. Johnson. Now, Deputy Pearse, Doherty.
Thank you. I'll come back to some of the specific credit union proposals, but just in relation to the report that the department have done in relation to local public banking and what's become known as the Sparkism model, to fill that gap which many have suggested exists. Can I ask just each of the panel whether they support that concept or not? Not the credit unions filling it, but actually a Sparkism model coming in here in terms of SMEs, just so I can get a sense of where different contributors are at. That's just the first question.
Johnson,
Sorry, just in terms of the model, we're MABs, and the report doesn't necessarily address the concerns of our clients because it's focused primarily on SMEs. So we have outlined, the gap that we perceive in the provision of credit to consumers. So I'm not sure that the model addresses that. The other one thing I would say is that the report highlights the potential of digitalisation, and I really do think that digitalised financial services should be looked at in more depth, because I think there is scope there for at least some of our clients' needs to be addressed.
The concept of greater competition and alternatives for consumers, we fully support that. Whether we need to start a new banking model from scratch to meet those, we don't believe that's needed. We believe the credit union movement can do it, but needs some enhancements which we set out in the earlier comments.
Yeah, no, I appreciate that.
More or less the same. I mean, the credit unions are there, so it's a matter of, and there's post offices there as well. I've another hearing here, so there's ways and means of not starting from scratch and not setting up other entities, but getting to business quicker, as it were.
Yes, clearly we have put forward this solution, and Deputy, let me restate many times what I've said here and other places. First of all, there is a problem out there, and the problem has come about because of the demise of ACC and ICC. They worked hand in hand with credit unions and other banking systems, and to be honest with you, most rural businesses, especially farmers, would not be in existence were it not for the existence of the ACC at that date. And I remember personally having benefited hugely because they were the only people who would lend. Let me be clear, we're not talking about a model that will either damage or hurt either the credit unions, because it shouldn't, or indeed the post office or anyone else. But what the report says very clearly, and it is working through terms of reference at the moment, that we have got to sit down and figure out how do we create an alternative banking model. It may well be with the credit unions, as Deputy O'Donnell was probing in terms of what are the obstacles. But right now, it is not a very good situation. The bank's situation is very clear, as far as we're concerned. Members of Irish Rural Link are still being refused loans. People are still not getting the same access to loans and facilities. And what Irish Rural Link is asking very simply, if you can come up with a better model, and that's all of the people in this room, if you can come up with a better model than Spark has, we're quite happy. We're not a vested interest. We're not going to gain anything out of it. So we're simply saying, if we do not explore, under the terms of reference set out by the Department of Finance, the next step, then we have ran away from the problem.
Mr. Maid.
Thank you. Deputy Doherty, the first thing we have to do is break up the monopoly or the oligopoly that the banks have. We're being charged outrageous interest rates in this country. The pillar banks have effectively over 90%, maybe 95% of the market. And the way it currently works, the indigenous economy is handcuffed and it has its feet tied. So we absolutely need to bring in change. And we have advocated basically two forms of change. One is the Kiwi Bank model, which is the New Zealand example that they've done with the post offices. We believe that must be brought into the post offices. Government are not listening to us. They want to bring in an agency-type bank instead, which is not community banking and does nothing for the communities. We're huge admirers, huge fans of the Sparks model for obvious reasons. It's been there for over 200 years and we know it's unbreakable. But where we slightly differ is we see that we have two networks in Ireland. We have the post office network and we have the credit union network. So we have adequate infrastructure and we have problems. Now, the government have promised us a stakeholders forum, and a lot of what's been discussed around here today probably should go to the stakeholders forum, and we come back, iron out a lot of the differences between us, and clarify them and come back. But one thing that has to be done, if we're ever to have a thriving indigenous economy, is to break the banking oligopoly. So, the Public Banking Forum of Ireland, we act in the public interest. We represent farmers, small business and citizens. So we want to see credit available at competitive prices, and we believe this can be done through the existing networks.
Thank you. Look, we believe that there is an alternative there to the banks. It's an alternative that we've been building fairly steadily, and we've been building cautiously and prudently, and we don't see that there is a need to introduce another banking system, because again, we have memories going back 8 and 10 years when there were competitor banks brought in, and then when it became profitable no more or insufficiently profitable, they withdrew. We are of communities and from communities, and we always made our mark in terms of meeting member needs and meeting our community needs, and that's what we will continue to do and go forward on that basis.
Thank you very much. Now go back to you, Deputy Doherty.
I know some of that was addressed in your opening statement, so I just wanted to get a handle on where you're at, and look, I've been a long-time supporter, and my party has, in terms of public banking, and I think it would be a terrible, terrible crime if we allowed the challenges that are there at this point in time with the pillar banks not meeting the needs of certain sections of society. If we miss the opportunity to actually deal with an issue in terms of public banking, whether that public bank is the credit unions being able to be tapping into in a bigger way SME lending or not. But I fear that what's going to happen is time will go on. It'll get it's going to get kicked into this forum now. There'll be a bit of discussion and so on and so forth, and then you'll hear that there's a bit more lending from the pillar banks, and next year might be a bit more, ensure the problem's all resolved and we're back at this kind of monopoly scenario. And the big problem I hear from the credit unions is that I'm just not convinced that the credit unions are going to move into this anytime soon. And I wouldn't suggest that the credit union movement don't jump into this. Obviously, there is, the last thing we want to be doing is fast forward in 5 years and saying to the credit unions, how did you get it so wrong? How come your underwriting wasn't done? How come you didn't have the skills to deal with this? And this is the challenge as to when you have so many different independent credit unions, how do we actually bring them all together and release some of the shackles that are on them in terms of either the consultation paper that's going to go out, but also equip with them with the necessary infrastructure and capabilities to actually meet some of the needs that are out there that a Spark as a model could meet. If the credit unions are going to move into that, what needs to happen and how can we take that forward?
Well, I suppose, first of all, Deputy Doherty, I would like to kind of offer you a little bit of reassurance here in that it is 5 years, almost to the day, since the commencement of the 2012, what was the 2012 Act, but it commenced in October of 2013. And that was the most significant and revolutionary change in Irish credit unions since the 1966 Act introduced by Jack Lynch TD. And in that 5 short years, the capacity for change in the credit union movement has been absolutely staggering. We had complete change in terms of our governance structures. We have seen the introduction of some of the stuff that my colleague Kevin Johnson and Ed Farrell mentioned there about one of the ways in which, for instance, we could address commercial lending, which is on a one-product basis. And we've seen that in the agricultural sector, whereby 4 credit unions started out doing what were called cultivate loans, and there is a significant number now, probably up around 50, that are now gone into that particular field, whereby a product was created, an approach was made in terms of the underwriting and stuff like that. And if you can do that for agricultural lending, which is a much more complex type of small business, you can certainly do it on the commercial level. We've also seen colleagues of ours who have actually gone into the whole area of addressing current accounts, and there are actually 2 essentially current account offerings. We've also seen, for instance, entry towards the whole area of plastic cards and stuff like that. So, for the last 5 years, as well as getting things like restrictions lifted, engaging in a really vigorous and challenging regulatory regime, we have managed to kind of, quite quietly and under the radar, do those particular things. So I'd be a lot more optimistic in terms of the capacity of my colleagues, the capacity of the directors who come from your communities and all of the other communities around here to actually change and deliver. And I can assure you we won't be found wanting in those areas.
I'm not underestimating the capacity of the credit union movement to change and adapt, and you outline in very clear ways how that has happened and how they have had to respond to the 2012 Act and some of the advancements that have taken place. What I am concerned as is in relation to some of the shackles, as I called it, some of the restraints that are on the movement, whether they will be lifted to actually allow for the credit union movement to meet its full potential and to act as that movement that fills the space that people are talking about, sparkism. And some of the change is happening in a fast pace, but some of it is very slow. And I'm a huge advocate of the credit union movement, but like in today's age, when people are using their iPhones to pay for stuff that that they're, as you mentioned, plastics isn't available across the board. There are restraints. The fact that we're only dealing with now consultation, which is going to take another year to lift the shackles off the credit union movement to allow some of those who have met their thresholds in relation to lending to SMEs or are very close to it. I don't think there's been a very good response from the central bank in relation to some of these issues. But I want to ask, and you can respond to that if you wish, but I want to ask in relation to the whole debate that's been taking place in terms of the credit union movement using its assets, using its members' assets to invest in social housing. And the Minister, Mr Johnson, had suggested that CUDA were now in a position to invest in a special purpose vehicle set up by one of the approved housing bodies, and also suggested, Mr Farrell, that the Irish League would be in a position to do so by the end of October. Can I ask if that has been resolved? Is the credit union movements now in a position to invest in a substantial way in social housing? And is the vehicle that was designed, that one by an approved housing body, is that the way that the credit union movement believe that their contribution should take place in terms of addressing the social housing needs, or would you have preferred for a different bespoke instrument to be set up?
Thank you, Deputy. Who wishes to take that? Mr. Morgan, do you want to come back because you want to make a reply?
Yeah, no problem taking that one. There were a lot of questions in that, so I'll just try and break them down. If you take the first point, there are already some vehicles there, albeit that they may reside outside of this jurisdiction, but would actually qualify. So there is the potential there. We ourselves in CUDA have been working on this for 6 years. It's pathetic, to be quite honest. And I suppose our concern was that we never wanted to do this by way of investment, and I will make that clear again today, that it's still not our preferred way. Our preferred way would be to amend the legislation to allow credit unions to lend, and in lending for housing, and like I referred to it as an emergency in the document, because that's what we believe. I mean, we have a social housing problem, but we also have an affordable housing real crisis. And we see members of credit unions, people doing essential work and cannot afford to rent or buy a house. It's just it's a bigger issue, and it's a societal issue, and it's not a society that we would like to see existing now or going forward. And for that reason, our belief is that we can prudently lend to support part of the solution. As I said, we don't believe it should necessarily be restricted to the Tier 3s. There are other co-op housing initiatives that have been proven very productive and very, very fruitful over the years that we would like to be able to help. That being said, a lot of good work was done, and regulations were brought into place to allow the credit unions to invest into an approved vehicle that then lent on to Tier 3 AHBs. So it's not necessarily as I say, there's a variety of solutions, so it's not necessarily just the approved housing bodies themselves establishing a special purpose vehicle. There's other potential solutions. As I said, we've done quite a bit of work on this ourselves. But this is where the real problem comes. There's really little point in establishing and commencing such a vehicle anyway, if the projects aren't there. These things, unfortunately, these things are they are costly to both establish and to run, for all the good prudential reasons that would exist for that. But they are expensive, and there's little point in commencing something like that if you do not have the projects to be funded from it. And that's where the real problem lies. The issue isn't, I know all the discussion is around setting up ICAVs and special purpose vehicles and all that. The real issue is getting projects to take those funds. That's the real concern.
Thank you. Anybody else wish to make a comment?
Yeah, well, I suppose more in agreement there. The reference, I suppose, to the League in October, I suppose we've been engaging with the various arms, the Department, the Central Bank originally, but they have changed the investment rules, as Mr Johnson says, since earlier in the year, not the lending rules. The Department, the Irish Council for Social Housing, I suppose, and the AHBs to see where this fund is. I mean, the Rebuilding Ireland 2016 clearly laid out that they were going to make money available. Support would be provided to an Irish Council for Social Housing sector-led special purpose vehicle. So we've been trying to ensure that that vehicle is being created, and assuming it was going to be created, this is back to July 16, that it was going to be then compliant for credit unions, and make sure that the rules that are in place for the credit unions since earlier this year would be taken on board, and that it would be a central bank regulated vehicle, which it has to be. There's an extra layer of safety, if you like, for the credit union money going in, other than private money going into it. And it's been very difficult to get clean facts on where it is. It looks now like they are creating the vehicle, but the special purpose vehicle, but the fund, it won't be ready, I don't think, in October. I don't think it'll be ready this side of the new year, and then it looks like it won't be central bank approved or central bank authorised at that stage. And whether the credit union movement will have to build a bridge or a buffer, if you like, of a regulated vehicle then to take the money or to invest the money into the approved housing body vehicle is now becoming the question. And the project's comment are relevant as well. I mean, land for these approved housing bodies seems to be in scarcer availability, obviously, as there's an upturn depending on the different parts of the country, but particularly the Tier 3 approved housing bodies, which would be more in the heavier density populated areas. The land values are increasing, if you like. So certainly we're back in those PQs. Said October, we're happy enough, but I'm not sure this is near the end of October. I'm pretty sure it's not going to be October.
Can I get the clarification on that? Because the information that's on the record from the Minister is that CUDA has been through all of the processes, that it is now able to invest in an SPV that has been set up by one of the approved housing bodies. So that's our understanding, that there is an SPV and that you are approved to invest in that. Would the League likely to be in a position to do that in October? And I presume it's the same SPV that we're talking about, and reference was made in the Minister's comments to the Irish Council and the process that they were involved in the Irish Council for Social Housing. So is there an SPV set up at the minute? And just a bit confused here.
No, we have not established one. Just to be clear, we have, however, over the last 2 years done considerable work on understanding what's required and how it could be set up and all. And again, look, to be completely transparent with this, we've done everything other than seek that final approval from the regulator for that. But everything else, I mean, all that work is there, can be done. But as I said earlier, what's the point in setting, in actually hitting the go button, incurring the costs if there's no projects? That's the real dilemma. And one of the things that should be said when the regulations, and a lot of work by a lot of people went into developing those, and when they were commenced by the central bank, only a month later, the classification of the AHBs, the Tier 3 AHBs, changed. And that did in fairness, that is a game changer as well. So there is another issue there, and the fact that irrespective of where they source their funds, be it HFA, be it credit unions or other private sources, it counts as on balance sheet. So they're now going to find themselves restricted by how much they can actually borrow on that because of that, and you know the knock-on effects of that.
Yeah, so
Can I just stop you there, because Mr. May and Mr. Boland have both indicated, maybe you want to make a brief comment and then I'll let you back in, Deputy Doherty. Mr. May first.
Yes, Chairman, thank you. I just want to clarify what we were speaking about earlier in relation to Deputy Doherty's question, because the Public Banking Forum's position, and has been a position, that's the submission we made to the consultation, is that we need to establish 10 public banks around the country, and that's where we see the collaboration between the credit unions and the Sparkisans. So we're not ruling out the Sparkisan people, and we're not ruling out credit unions. Yeah, we think that in the establishment of the public banks who would do all their business through the branch networks of the credit unions, that's where the collaboration is required, and that's why we need to everyone needs to sit around the table. So I hope I didn't mislead the
Thank you for clarification. Mr. Boland?
Yeah, actually, what Seamus has said, I pretty much agree with. We said 8, you said 10, so let's argue the point. The point I'm making, but your question is spot on. The reality is, the slowness in which has been outlined by my colleagues in the credit union, by a government, by a Department of Finance, is trying to protect the existing banking system. That's why the slowness in allowing some flexibility, allowing some regulation to favour the actual, either the individual, the potential homeowner, or the community. And while we have a banking system at the moment, one kind of bank, another in the zombie place, while we have that in existence, we are going to have this kind of slow deliberation of allowing either you guys to get regulated so that you can lend more properly, or a public banking system, which obviously we believe is the way forward. And where there's no public banking system, then the existing banking pillar continue as they are, slowing down the government, slowing down us, slowing down people who are not in housing, and slowing down the country. That's what's happening.
Thank you.
I'll
finish up here. I just got a couple of questions, and maybe Mr. Johnson that you can outline. And I hear your point very clearly in relation to the classification of the ABHs and how that has basically potentially torpedoed what was on offer 6 years ago and should have happened many years ago. You know, and that's why I talk about the frustration and
yes,
the length of time that these take, and that was outside of your hands. And but anyway, you mentioned that you think the best solution is for it to become a lender as opposed to an investor. Can you explain just to the committee, lending to who exactly are you talking about here, as opposed to investing, right? So just so that you were clarify, are you talking about people who want to just purchase homes, or what? Just can you clarify that? And if I may just ask a number of other questions in relation to Ms. Connor there, you talked about a sandbox type of regulatory system that would be help to serve the atypical customer. Can you let us know just a wee bit about that, and have you engaged with the central bank in relation to that proposal? And the last question I have is in relation to the public banking model and what the report suggests. And I agree, everybody needs to get around the table, and the sooner that forum is convened, the better, and hopefully it's done with genuine motivation. But this was always, the Sparkism proposal was pitched to supporting SMEs. The government report suggests maybe a narrower focus, finding a niche or a gap in the market would be maybe more appropriate. And has that been considered, or is it something that maybe is appropriate for the forum to consider? I just want your views on that. So thank you.
Deputy Doherty, go to Mr. Johnson first.
sure. Just very quickly, when we say lend to who, we actually did submit before a draft amendment, and it spells it out. We'd be very happy to send it again. It's to the AHBs, all tiers of AHBs, and to housing co-ops. So anybody that really would be involved in social or affordable housing, we would be interested in being able to lend on a collective basis to them.
So at the minute, like, the only affordable housing scheme in the state is the Ballymun scheme. They have an arrangement with the AIB. The credit unions can't fund a co-op, which, you know.
Correct.
Yeah, so that's the type of area that you'd like to get into. Yeah.
Absolutely, and encourage more and more of that. We're happy to send on the wording that we have just to see that.
Okay. Ms O'Connor?
Yeah, just in relation to the sandbox, we have raised that issue in submission to the Central Bank on its consultation on digitalisation. Sandboxes, it's like a safe regulatory space for small startups, so they don't have to invest in the regulatory overhead at the outset. Lots of countries do it, lots of different ideas have emerged. In this space, I think there's potential because fintechs, you know, the research indicates that with regard to lending, some fintechs are bringing kind of the atypical consumers into a kind of prime or near prime market because they have other detail, over and above the credit rating in terms of, you know, informing their lending decisions and so on. The other issue is payments. Payments, in our view, there's huge potential for our clients under PSD2. Don't ask me about the technical detail, but the research indicates that if you can speed up payments, you ease cash flow, and certainly in the area of SME lending as well, I think there's a lot of potential there. And what I suppose I'd regret is if we didn't give time, investment right now to look at kind of the social potential of fintech for our clients and for indeed the underserved populations that this report is around. I think we'll have a really missed opportunity. So,
okay, thank you
very much. Yes, Mr. Boland.
Just to be clear, the SME sector represents the largest employer in rural areas. Rural and regional economies have suffered severely in this recession that was, in far as they're concerned, they're still not out of. What we're saying very clearly is that unless the terms of reference are published very shortly, and this forum meets urgently. We would have preferred it actually got on to the business of looking at the logistics of a public bank rather than talking around it. And your point earlier on is well made in the sense that are we going to try and kick it further down to touch and somehow hope it goes away? Well, Irish Rural Link will not be going away from this subject anytime soon. We want it urgently dealt with. Otherwise, we are a prisoner of the current banking system.
You're happy with that? Yeah. Now we'll move on to the next speaker, Deputy Sean Sherlock.
Thank you, Cahirlock, and I apologise for not being here for all of the interactions, and a lot of my questions have been addressed, so I'll be very brief. I'm just very interested, you know, to hear the commentary from Mr. Boland and Mr. May in relation to their statements, if I understand them correctly, that you know, that the Spark Chasm model would fill a gap in relation to lending. Could I get an understanding of whether or not there's a particular geographical bias there, so to speak? Are we talking about the Midlands, Northwest, Southwest, Southeast? That's the first question. And following on from that if there was a better model of lending, if I understand you correctly, Mr. Boland, and particularly, that there wouldn't be the need for another banking system. Do I understand you correctly? Firstly, on the geographical considerations.
Well, on the geographical, obviously, in our very detailed proposal, we did mention the Midlands as a potential place to look at. The Midlands are extremely affected by the recession. Investment, the Western Development Agency has showed that the level of lending has considerably reduced over the last number of years in the Midland region, and that is suffering. But it is a reality that it is the Midlands, it is also the Southwest, and indeed the Northwest has suffered enormously as well. So that's the geographical answer, and I don't have that answer question. Yes, let me be very clear about we're talking about a public banking system.
Yes.
And the clue is in the word banking. You know, it is exactly what it is, a banking system. So what we're saying is whatever model of public banking we pick, and remember, Sparkas are not insisting, and never did, that we would adopt the German model absolutely,
yes,
because that's not possible. What we do need is to adopt the Irish model of public banking. And we are very clear, it's a banking system. We proposed 8 regionals. We talked about synergies with the credit union and Post or whoever else. I think everybody would step up to the plate.
Okay,
and then, and from there on, but it is a banking system.
Thank you. And I would take some comfort from the interventions of the representative organisations here today, where, if I'm reading it correctly, they're stating that they're open for business, they're ready to adopt, you know, new mechanisms and, you know, enhancing their offerings, if you will, to try and move into the very space that you're talking about, where there's a gap. And I mean, the proof of that is, for instance, on the CUMA, on Mr. Molan's intervention in relation to the 2016 regulations, where, you know, he states that in March 2018, commercial loans accounted for 1.9% of the existing 4.5 billion credit unions have out on loan, and that's an equivalent of 0.51% of our assets, his words. So do you take some comfort then that from today's proceedings that there is the scope here, subject to a move by the Central Bank, by the Department of Finance and hopefully by this House, that there is scope for the credit union movement to step in, if you will, or to plug that gap?
I do take comfort, but let's be clear. Are they going to become a banking or part of a banking system? And that's the question. And it's not necessarily that I'm saying they shouldn't or they won't or whatever. I'm simply saying that's the answers for the forum to look at. But let's go back to the reality here. We also want to keep credit unions open, every single one of them. Now, not every single credit union, especially the smaller ones, who serve an enormously valuable place in being small. You don't want to. Not all of them will be able to, you know, loan huge amounts of money. That makes kind of sense. And I think my colleague did say there would have to be, you would have to look at that. And I'd be quite glad to see them looking at that. But remember, there are I think to quote you, 261 units around the country. Now, how do you manage the legislation so that all of them can work in some sort of cohesion? And the worst thing that could happen, if the credit union was suddenly to become a kind of a banking institution, you might have pressure on it to start closing branches. So that's a real danger here, unless we really work this out properly. Irish Link is not, let me be clear, we're not a vested interest. You know, whether Spark has a model
that's
is
understood.
Picked,
just for the record, that is understood. Yeah.
But just that you do understand it, because what we're saying is we need a proper.
Well, you can take that as understood.
I know, but just to be sure.
Okay, look, I just moving along very very quickly. It's more of a technical question, and it's just pertinent to. Well, it's more of a general question. It's in relation to the perception that I would have had maybe a year or so ago, whereby the public perception was that the credit unions were quite frankly being put through the ringer by the central bank in terms of regulation, and we had, you know, much discussion in this committee about that process. If I'm reading the tone of your interventions today, one senses that there has been some improvement in that relationship. Or else you're coaching your language very, very carefully here, I don't know. But I would like to hear from the representative organisations about your perception of the relationship with the central bank now in relation to regulation and in relation to the future of credit unions, if you will. And just, you know, just a short intervention or short answers. I'll start with Kevin. Mr. Mayor, did you want to?
Thank you, Chairman. I was just to answer Deputy Sherlock and indeed Deputy Doherty. Deputy Doherty mentioned about the report talking about niche markets and gaps in markets. Well, we must be very clear that the Public Banking Forum's proposal was for an all-encompassing full banking service model that will on the one hand compete with the commercial pillar banks and on the other provide a long-term sustainable platform for the survival and growth of both credit unions, post offices and the indigenous economy. We would expect that the report would say niche markets because it's all about, the department is all about protecting the banking oligopoly. The second thing is that this would be, we have proposed, we're very similar in what we propose, 8 or 10 banks around the country, because each and every part of the country has to be serviced and needs public banking. So it's a nationwide thing. I think you were talking about a pilot scheme, maybe in the Midlands to start with it, but this is nationwide. And just on the last thing in regard to regulation, because I know the representative bodies are going to speak, but in relation to regulation, it's quite clear that the rules and regulations that have been applied to credit unions down through the years are in breach of competition law because they're discriminating against the credit unions compared to the banks. They're applying dissimilar conditions to similar transactions effectively, but they're dressing it up. So yes, I saw today that the central bank seems to be modifying its stance somewhat, but it ought to be, and it has a lot longer to go.
Mr. Boland, do you want to add to that?
Well, no, I already answered.
I'm satisfied on that one, Chair. Just to get the perception of regulation and a sense of the relationship now with the central bank from the perspective of the representative organisations.
It's a very challenging one, and the relationship between regulator and regulators will always be and should have a healthy tension. Obviously, the key is that it's a healthy tension, and I know the central bank have said to you that it is of all the sectors they regulate, it's the one that gets the highest level of engagement. Well, you know, if that's an offer for us to pick and choose which level of engagement we can have, we'll take that offer and happily reduce it. But you know, we would be very respectful of the role they have to play. It's a critical role, and I think everybody agrees with that. But as I said earlier, I mean, we do need a more constructive, to that end, it has definitely improved, and it's to see it continuing to improve. I know there's a responsibility on the credit unions and ourselves as the bodies to support the credit unions and to support them bringing ideas and proposals to the regulators. I think one of the things that we probably have individually and collectively got better at in the last number of years is taking advantage of what is there today, of what the rules permit today that we may not have necessarily looked at in the past. And I think it equips us to present our cases better than to the central bank, because we can show home loans being a perfect example. We have demonstrated that credit unions can do these prudently. They can serve segments of the market that aren't being and haven't been served. And you know, we also did have, and the bodies, the three groups here, did have considerable input into the CUAC review that was conducted, and that was, you know, a very thorough report. It did highlight a lot of things that hadn't been delivered, and as such, an implementation group of which we all participate in, along with the central bank and the Department of Finance, and things are being worked through. I mean, I think I certainly share Deputy Doherty's concerns around this timing and the pace that things move at. We sent in a very thorough and detailed submission around the longer term lending, and you know, that was November of last year. We hope we will see the consultation paper coming out in the next few days, but as you rightly said, that there's another extended period of time before we'll actually see that into regulations.
Thank you. Right. Sorry.
It could be the middle of next next year before there's any changes. I mean, certainly, as Mr. Johnson says, the engagement is probably better, but I mean, don't underestimate the level of regulation there is on the credit unions. That hasn't in any way lightened or eased off. I mean, there's still a very heavy regulatory regime in place on the directors, the staff of credit unions. So although the consultation paper that was talked about earlier is coming tomorrow, you know, there's a lot of work gone into getting that through the system. I mean, that said, on the other side, there is, I suppose, strategic development and business model development being done. And for example, the latest, I suppose, group the central bank put together is a group of credit union CEOs only, and you know, there's no representative body on that group, or there's no volunteer director of credit union on that group. And certainly the league as a rep body and the directors of credit unions felt that the law more charged them with doing strategy, and the CEO and the staff of the credit union implementing that strategy. So that's certainly something that we wouldn't have seen eye to eye in recent times with the bank, albeit a relationship that is improving each year, as it were.
Mr. Moran, do you have anything to add? Or?
Just to say very briefly now that, okay, the level of regulation hasn't eased, it's just that we've got better at actually managing it. There was a very important point there made earlier about kind of, you know, smaller credit unions and the ability of smaller credit unions to be responsive in terms of business lending or any type of lending and stuff like that. And again, I think the vehicles that my colleagues have spoken about are very, very important in that, and it's very important going forward. And indeed, the scrutiny that you know, a public forum by public representatives like yourselves is indeed very, very valuable in informing the pace of things and the exact nature in which things are treated. But it is very important going forward that that smaller credit unions would not be excluded, or their communities, more importantly, by virtue of their collectivity in terms of assets.
Okay. Deputy MacSharry.
Yeah, great, thanks. Unfortunately, I have a question coming up in about 2 minutes in the door, so I'm just going to throw out a few questions if I can, Chair, and maybe I can check the record then to see what the answers are, because I can't wait for them. If I could ask Mr. May, and just to commend everybody that's here and for their efforts in all of the work, but just I'm particularly interested in Mr. May. You mentioned regulatory capture. There's another phrase that I'd feel, and that's political capture, and that you know, in here, are we captured by a central bank that tells us what we can and cannot do based on spooking the market? And we often hear this, I mean, going right back to the banking inquiry, and is that preventing us from kind of catering to the market in terms of the people? The other thing I wanted to ask is, it's great that you're out there trying to drive this, but are the government or are the state engaging superficially on this issue? In terms of, we've had the report, now we'll have the engagement, and now there's the promise of another forum. I mean, if we're to succeed in what the programme for government states in terms of providing, you know, kind of public banking along the Sparkison model, or whether it's the Kiwi Post Bank model, does it not need the state to be the driver? If we're to succeed, rather than your good selves, who I often find with government departments, and I know the central bank are hardly much different, is they use divide and conquer as a mechanism not to move things forward. So if CUDA have one view and the credit union have another, and Irish Rural Link another, that even though there might be very little to separate you on particular issues, that the response for inaction can be simply, you don't know what you want, therefore we're not moving things forward. So are you the wrong drivers as a result? I mean, do we need the minister in here, of whatever colour, to be saying, I am going to introduce a post model, you tell us what you think it should involve, but I'm going to do it as the minister? The other thing then I was going to ask Mr May to elaborate on was just the indigenous economy and what we've seen in terms of Sparkassen and how they're geographically only allowed to lend in certain areas and support certain, I suppose, they're not lending money to people to buy speedboats. It's about supporting the economy, supporting rural employment. So just those few points, I'm putting them towards Mr May on the basis that I kind of know the credit union view and I know the rural link view. So I'm sorry I can't wait for the answer because I'm literally next up, but I will check the record and thanks for being here. Okay.
Mr May.
Thank you, Deputy MacSharry. Just a few points on that. Deputy MacSharry asked, was there political capture basically as well as regulatory capture? And the answer to that is, of course. We wouldn't have had the banking crash. We wouldn't have the orgy of credit that brought about the crash 10 years ago if the body politic hadn't been captured as well as the regulatory body. That's why we keep insisting that we need, this cannot go ahead without political input, and the politicians must differentiate themselves and separate themselves from the department and from the central bank. And just on the indigenous economy, I'd like to take the opportunity to give one example, and it's in relation to the agri sector and in particular to the beef sector. And it's a report that we did recently, and there's a section of it on fifth quarter. I don't know if anybody knows about fifth quarter, but it's basically the waste product from cattle, and it's the intestines, the bones, the ears, the head, all of those. And the fifth quarter is being given by.
Can I interrupt you just for a second?
Yes.
Because Senator Reilly has to go to a vote, but he's anxious to put a question. So can you hold fire there?
Sure.
I apologise. I didn't expect to find myself in this position. I didn't even know if I'd get here, so I didn't bring a lot of stuff. Look, I'm a huge supporter of the credit unions, huge supporter of Rural Link and the Sparkassen model. I was out in Germany yesterday, spent a full day at it with some of the people in the room here. So enthusiastic are they about their thing. We nearly missed the plane coming back. But very briefly, the public bank issue is the one now that Seamus May has been addressing here, and I know that Seamus Boland's interested in. I just feel that there is opportunity for more cross-fertilisation between the credit unions and this model, and on post, and all bets are on the table here. And I suppose in the short time I have, because I don't want to miss the vote, just to say, the comment was made that the credit unions would like to see the legislation amended so you could lend. That would take time, obviously. And the special purpose vehicle that you were alluding to earlier that you could invest in, that's not something that would allow you to move forward more quickly, just for that particular end of things. The lending on the larger grounds, I couldn't agree with you more. But I mean, you're going to be limited to lending to your members, are you not? The Sparkassen model is public banking. They only lend within their region. They're huge contributors to their region as a consequence. I mean, one of them paid over €500 million in tax to the local authority over a small period of years. And it's run by, nobody owns it. It's owned by the public, and that's why it's called a public bank. It's got senior officials in the bank, it's got local politicians, which might make people nervous in this country, and it's got their customers. They're all represented on the board, and they have a supervisory board, and they are very keen to help us set up that model here. That's what I want to say. I do believe, and I'll just say this before I go in case I don't get the opportunity, I don't believe that we need another big long report, forum, whatever. We need action. And I'll be calling on the Minister to take that action. Certainly let's have a forum, let's have tight terms of reference that allow us to do the work that needs to be done in that forum, and let's get the report back time limited, and let's get this on the road, because there is a huge gap in the market. And to address some of the issues raised by others earlier, the geographical location thing is actually to protect the local area so that the money stays there and benefits that area. So it's not that one area gets precedence over another. But we need to get movement now around the obstacles to this. And I know that you've been exploring with each other, various types of cooperation. But I think now we all have to try and take the local jersey off and all get into the ring and try and make this work and make it happen for rural Ireland and get back to old ways of banking, which is what Sparkassen is, around for 200 years, going down, walking the land, going down, sitting in your shop, sitting in your business, understanding you, understanding your community because they're part of it, and lending and been able to do that risk assessment on more than just what's written on paper, but the background knowledge of where this business sits in the community, this family sits in the community, this person sits in the community. And I think that's hugely important. So look, I just want to give you real encouragement to continue to fight this fight. I'm certainly going to make as much noise as I can about it. I do believe that we have all the problems that have been outlined in terms of a bit of capture of protecting our own banks, whom we need, but they do a different job. And that's so clear from Germany, where we had a presentation from a man who had a great business, had an idea, went to Deutsche Bank, I don't mind mentioning them, and they funded him up to a point and then said, no, no more. Went to Sparkassen, they took him on, he now has a turnover of 10 million and growing. So, and it's in their area. So that's 10 million into that community being collected by that local authority in tax, etc. So the government here shouldn't, I believe, worry about the risk too much, because they're going to get the money back in tax, and they're going to get the money back in jobs, and they're going to get the money back in terms of a better society as well. Never mind the money, but that other thing that's more important than money, which is community cohesion. So I wish you well. I'll certainly be raising this with the Minister and try and expedite this as quickly as possible. Thank you.
Thanks
I'm sorry I have to go.
Yeah. Sorry for interrupting you, Mr. Mayor.
That's
sorry.
okay.
Finish off Deputy MacSharry's questions and then deal with Senator, if I want to deal with Senator Reilly's contribution there. And I apologise to Deputy Murphy, but
Chairman, Chairman, I was just given an example of the indigenous economy and what we can actually do, because we all talk about the indigenous economy, and I just think it's worth talking about the beef sector. And as I just said, the fifth quarter, the waste product that farmers aren't getting paid for not a cent consists of the heart, liver, kidneys, tongue, stomach, skirt, tripe, intestine, embryonic fluids, and it goes on and on. But the fifth quarter actually is the most valuable part of the animal. But there's no money to back farmers to set up cooperatives to process fifth quarter. And for example, fifth quarter is now used in the making of pharmaceuticals, cosmetics, household and industrial goods, ointments, binders for plaster and asphalt, footballs, lubricants, soaps, lipsticks, face and hand creams, and ingredients for explosives. In addition, fatty acids are used in the production of chemicals, biodegradable detergents, pesticides and flotation agents. Bones, horns and hooves are used to make buttons, bone china, piano keys, glues and fertilizer. Also gelatine for photographic film, paper, wallpaper, sandpaper, combs, toothbrushes and violin string. And more than 100 individual drugs, including insulin, are derived from cattle. That's the answer to our agricultural sector. But where, if you go into a bank, into AIB or Bank of Ireland and tell them you're going to do some of these things, you'll be laughed at. So that's, just to put it in perspective, that's why we need public banking, community banking, and that's why the German economy is the fourth largest in the world. So we need to stop talking and we need to get moving.
okay. Mr. Boland.
Oh, just again to reiterate what I've already said, what we're talking about here is reviving rural economies, creating a financial situation that is based in those rural economies, based in those regions, and that in itself will, and as the Deputy said, it isn't going to cause the banks. One of the employers said at a NED conference a couple of years ago, basically the banks find it a lot easier not to be processing what they call small accounts. Now, to you and me, that might be €1 million or two, because it's too expensive, whereas they prefer the big, large, massive accounts. In regional economies, you always have the smaller businesses who are significant, create enough employment, but need greater attention from the lender than they get from the current situation, and that's why we're proposing it.
Deputy Murphy.
And Chair, my contribution will be pretty short now on the basis that some of the questions I wanted to ask have been asked and answered, so there's no point in delaying you people any longer. Just to say my own support, and I know Seamus, the two Seamus as well, and I know Ed and other members here pretty well. I've given total support over the years to what you're trying to do, and it appears to me that we could get agreement among all of you people on a rural bank, but it looks to me like, you know, it's like you're the fox that's actually caught in the den, and if you go to put your head out, you're going to be shot down. Now, that's the way I read it. I'm listening all afternoon, and it appears to me that despite the will you have and the plans you have and the best effort you have, there's somebody there at the top of the borough waiting to take you out if you put your head out. And basically, I go back to Minister of State Damien English in reply to a PQ, and I quote him directly, going back a number of months. One of the credit union movements is ready. It is through all of the process and has money available. I cannot be any clearer than that. Now, to me, that's worth nothing anymore. And quite frankly, to me, there's a lot of blocking going on there. So I'm going to put the question directly, whoever wants to answer it. You know, are we as far away as Timbuktu at getting this up and running? Because rural banking, as it was given by the pillar banks, is gone. You walk into my town in Strokestown, Roscommon, there's no counter service there anymore. It's a joke. And that's happened in several of the towns of Ages in a number of the counties around the country, as you know yourselves. We won't have any banking service. We're lucky to have our credit unions there. So we do need this, you know, public bank. We need it. Because the banks have completely, as somebody said already, they don't want small accounts. They don't want people personally calling into them. They'll tell you, well, we'll call out now to the community. Don't go into our bank. We'll call out and we'll mix with the community. So this is very, very much needed in Ireland. But the worry that I have here today is that we're a long, long way away from getting this achieved. Hopefully I'm wrong, but maybe somebody would comment on that. Thank you.
Just very quickly, who visited Germany, and some of the members here visited Germany, we found that in regions around Germany, Stuttgart region in particular, that the impact and the influence of Sparkasse, as it happens to be the name of the public service bank, local public bank, was huge. It effectively governed the economic development of that particular area. And that in itself created jobs, created thousands of people working directly for it and indirectly. And I think that's what we're talking about. We're talking about a bank. And remember, during the recession, the banking service or the banking structure that didn't fail was the Sparkasse model. And were it not there in Germany, Germany would have very different problems right now. So that's what we're saying. That's the model that's there. We should develop our own Irish model, and as I said, the people in the room are probably capable and skillful and capable of doing that. And that's what we're really asking. And going back to a question around who's stopping it, frankly, I think the political system, across the system, Irish Hurling in fairness, has met a lot of support. But there is, I would call it a hardcore in terms of maybe the Department of Finance, maybe the banking fraternity itself, that see it as a threat and don't want to bring it forward. But we need bravery at this stage, and we need leadership.
Mr. May, did you want to comment?
Just one short answer to Deputy Murphy. Again, you asked a straight question. I give you a straight answer. Probably not. You have Minister Ring, and I read out what he had to say about banking and the desperate state of banking and how badly everybody needs banking, public banking, etc. But when, and this is just an example, maybe it's a bit unfair, but when Minister Ring crosses the M50, gets into the Pale, the government stance is there's no compelling case for public banking. So which is it? And why is this the government stance? Everyone knows there's a compelling case for public banking. So the problem is at government level. It's a political problem, it's a Department of Finance problem, and it's a central bank problem, and it's also an ECB problem. And these are the entities that are preventing this from going ahead.
I think you can judge that, Mr. May, by the fact that if you read through this report, it's all about burying the proposal, in my opinion. And the fact that the ministers were not available to come today to discuss this is a further indication that the political system doesn't have the backbone to do what is necessary. So now that we're discussing the confidence and supply agreement, you never know, Fianna Fáil might find itself again and ensure that public banking is put back on the agenda. Deputy Fitzmaurice.
Thanks, Chairman, and first of all, welcome to you all. I know I'm probably musty for a good while. We know what's needed. We know the medicine that's required in rural parts of Ireland. we see in the new land agency, and I know Ed and Kevin are there from the credit unions, my understanding is that you're not even allowed to give money or be facilitated in borrowing money from ye in the new land agency. And that shows the willingness, or even to think about ye, first of all. That's the first thing you have to do. Think about someone. If I want money, my first thing to ring about is the credit union. Do you know what I mean? First, if I was buying something. But you're not even thought about in the new land agency. Or sure, we'll go for the commercial option. Year being stymied, and the big problem for credit unions is there's a lot of money there, and if you have money there and they're not making interest basically for you, you're in trouble. No more than a business. If you're not making money, you're not going to survive. And Seamus May, I know he has travelled the country, north, south, east and west, and Seamus Boland, I've fought with him and against him down through the years. And the bottom line on it is, we can do all the reports in the world, and as John McGuinness and myself are going around the place on about this minute people being whipped out of their houses, and we talk about a housing crisis, and we're blue in the face talking about it. But the problem is, the people that matter don't want to make the decisions. We would rather make sure that the vulture funds are made up than someone in Ireland. We would rather make sure that we borrow money and make someone up in Europe than we would help maybe some community get a few % interest in a community banking model. And in turn, and like, I just get so fed up talking about this crack for the simple reason, in turn, the decisions are made in the central bank is one, because we know, going back a year ago, to get a few small movements in the central bank, it's like trying to put a jigsaw together for months and months, and you'll be back in your backside and you have to go forward. And until the decisions are made there, we know in rural Ireland that AIB, Bank of Ireland, Ulster Bank, none of them wants to be there. They have let people go. From most small towns, they've gone from it once we've bailed them out and came to their rescue. They don't give two damns about the small villages around the country. At least if you have a public banking model and the credit union sector, but Jesus, who is under the open in the local place where there's maybe a pub and a shop, and the people is facilitated to go in. You can, on a Monday, you can put it in your application, and on Wednesday night, you get a phone call that it's either gone through or it's not in a loan. And in fairness, most times for everyone, I think, around the country, they're helped. But until the decisions are made to facilitate this, be it at central bank, and I don't know whether the ECB, John McGuinness, would know more about this than me, but unless there's a willingness in government, a government cannot say you have to do this, but they can create the environment and push the buttons behind the scenes that makes this happen. And it's a sad thing to say to you. You have travelled the roads and you'll continue travelling because you're believers, and rightly so. But until the will is there, and probably the people are in the gout, and when you look at the polls, vote for the same Tweedledum and Tweedledee, that's still, in my opinion, screwing rural Ireland at the moment by not giving us a facility to use our own money to build rural Ireland and benefit the people that would be invested or putting the money into the public banking or the credit unions, and get a return out of it, as well as building infrastructure and building a countryside. But the will doesn't seem to be there, and everyone will tell you you're great fellas, and don't ever get too, or your head will be nearly swole with all that'll tell you that you're good. But the bottom line on it is it's action, and unless we get action, we're going nowhere.
Would any of you like to final comment on any of the issues that we raised? Mr. May, you've your hand up.
Just one point. Again, I agree with everything Deputy Morris had to say, Fitzmaurice had to say. For example, the Strategic Banking Corporation, that raised 1.25 billion. And that money came from KfW in Germany, it came from the European Investment Bank, it came from the Council of Europe Development Bank. And when one particular submission mentioned 170 million was required, the department said, oh no, we can't come up with 170 million, that's ridiculous. Well, some of the other submissions didn't look for money at all. Our submission, which was a very substantial submission, and we mentioned KfW, we mentioned the EIB and all of these, but there was no mention. I mean, basically, as far as we're concerned, the consultation group had its decision made before it started out its work, and we've got to get real about this.
Mr. Johnson, did you want to say?
Yes, just a comment that while the credit unions cannot solve all the problems that Deputy Fitzmaurice outlined there, we're certainly very well positioned and very, very willing to contribute to meeting many of the needs. I think what's helpful about this type of discussion is that it does help us to understand some of the needs that may not be getting met. And you know, in the opening comments, I outlined our vision for credit unions. If it was to really condense that and summarise it, it's simply for the credit union to be the financial hub of the community. And that's really what we're trying to do. And it was interesting listening to Senator Reilly talking about his visit to Germany. He could easily have been talking about a visit to any credit union. I mean, I know, Chair, you're very active. I know you're very aware of what goes on in the credit unions. But everything he talked about knowing the individuals, about knowing the community, that all exists. So, I suppose the concern we'd have is that the talk of establishing a new entity and the capital that's required for that and the licences and everything, the infrastructure to put that in place, it's actually not needed because we actually have all of the foundations in the credit union system. That being said, you know, while the financial term is banking, we do not want to be a bank. We are credit unions, and the one thing we do want to make sure is that the regulations and the legislation continue to protect our uniqueness. And that is something that we do have a bit of a concern about, that eroding. And the other thing we would want is a level playing field. There are other people out there providing either consumer loans through like the likes of PCPs or store credit and these things that may appear very convenient to the consumers. They're not regulated, they're not subject to the and the consumer's not getting the same protection that they would get from their credit union.
Look, Mr. Boland.
Just very quickly, and to acknowledge Deputy Fitzmaurice's remarks. Yes, we certainly had some fun over the country travelling around it on another matter. But in this one, let's be clear, what Irish Link are asking for, and we acknowledge, Chairman, your role in this and bringing this into the public eye, this better be solved, because if we walk away from it, if we decide to leave the pillar banks the way they are and protect them at all costs, then the jobs in rural Ireland won't happen and the health of the financial part of rural Ireland won't grow. There are problems to be solved. There's regulations to be solved. We propose a public banking system. That's what we could have sat outside the gates here and do what a lot of groups do, make loads of noise, but don't put forward a proposal. We put forward a very detailed proposal. You could argue that's risking getting your head cut off. And in a sense, the department tried to cut bits of it off. But that proposal is on the table and it's still there. And we want to make sure that when it's proved to be useless and a better idea is on the table, we'll be quite happy. But right now, Ireland needs a local public banking system.
Okay, Mr. Moran.
Just to support Mr. Johnson's case there, in terms of, like, we actually have capital is important, strengths and reality is very important. We are significantly more capitalised than any banks in this country, and my colleague here spoke about the model that didn't fail. And I can remember a statement being made in the houses of the Oireachtas that there was a €1 billion hole in the balance sheets of credit unions. Well, we never found it. It wasn't there. So the capital is important, the reserves are important. We have over 18% in realised reserves there. And in terms of, we'll say, some of the other kind of, I suppose, one of the areas that wasn't addressed here, and I did mention it earlier, is the whole area of micro-lending. Again, it's a very important part in terms of the regeneration of our communities. It's certainly one that we're in the business of. It's not being picked up in the statistics because it would be below the commercial level. And the value of the issue of there being a level playing field. We are the original peer-to-peer lenders, but there are others out there in that space whereby they do not suffer, or they do not benefit from the same level of regulatory scrutiny that we do, or more importantly, the consumers don't benefit from that level of regulatory scrutiny and protection.
Well, to conclude the meeting, let me thank each and every one of you for coming along, and those that sit behind you and those that were here in the public gallery. It's something that is very, I think, it has priority here in this committee in terms of the credit unions, in terms of community banking, in terms of trying to find a solution. And while Deputy Fitzmaurice may have, given you the difficult hill that you have to climb, and he is a very strong voice for rural Ireland, I think you have to continue the work that you're doing. The committee here will assist in every way that we can. If you have suggestions, if you want to come back again, if there's any way that we can support you in the work that we do, we will. And I make that commitment to you as chairman, and I know that I speak on behalf of the committee members. But it is a fact that the government need to take heed of the conversation that we've had here today and the efforts that you are making. And again, I say that, I will press in terms of the confidence supply arrangement, if that should go forward. I know it was in the last arrangement document. So, yes, we've work to do, but please don't give up on it. It is important, and I think that it is an important model for the future. Thank you very much for attending. The meeting is now adjourned until next Thursday. 8th of November, yeah. Why are you asking Thursday?